Guys, the Trend Trade Troubadour. Good morning, Ron. Good to see you guys. Man, I'm excited about today. You guys killed it yesterday in this room. And I'm not talking about the wins you posted. What I'm talking about are the questions you guys asked. Really opened the door for some great conversation, some great information, some great pattern recognition. So thank you for that, and let's do it again today, guys. Keep those questions coming. This classroom is a better classroom when you participate, when you don't force it into the position of being a lecture, but allow it to be a discussion. One for the lawyers, just to get going, guys. Um, there is a risk of loss with futures. You can mitigate that risk by having a plan. But this is an educational room, guys. This is an informational room. I don't give trading advice. I don't tell you when to enter. I don't tell you when to exit. I don't give you signals to follow. What I do is I teach you to read your indicators, guys. That's my job. And I love my job because it's just patterns. Um, if you were, hey, good morning, Andy man. If you looked up in the chat box just a minute ago, I posted a thing from a website about the 1980s video games because I think a lot of us identify with that. Some of you are a little young for that, but guys, in the 1980s, you could take a quarter and drop it into a video game. Yes, it only cost a quarter back then. And if you knew the pattern, if you followed the pattern, you could play on that quarter for hours and make everybody behind you upset that was waiting for the game. And there were games like Pac-Man and what else had a pattern? Defender had a pattern. Galaga had a pattern. And it wasn't that you had to be able to program and know the secrets of how the game was created, but what you needed to do is you needed to learn the patterns that created success. So if you're like me and you're in your 50s and you remember that, weekends at Chuck E. Cheese, Qbert had a pattern. And guys, I want you to go back to that. I want you to go back to believing that trading has nothing to do with your desire to win. That trading has nothing to do with being active. Trading is patterns, guys, and I'm going to teach you the patterns, and you're going to be able to recognize the patterns through chart reading, guys. So I'm going to give everybody in the room trading plans. All you have to do is download it. I'll drop it right in the room. I'll do it right now since I'm talking about it. There is a plan for TradingView, and there is a plan for NinjaTrader. They are different plans because they are different platforms and there's subtle differences. So make sure you know which platform you're on when you start learning rules. But both of them have checklists for entry, guys, and the checklists have 3 things on them. That's it. It's not a long drawn out process. It's not 72 indicators on 3 different time frames and news references, guys. It's 3 rules and 2 charts, regardless of which platform you're on. So what I'm going to do is I'm going to hand you these plans. They're in the room now, and these plans are designed to optimize your chances of success. These plans are the beginning of your learning journey, teaching you to recognize some things so that you can grow from it. And most importantly, these very simple plans in the first hour of my room is dedicated to learning these rules because these rules identify advantages, guys, and it's the advantages that become your trade. Chart reading is about 90% of your day. Nobody believes me in the beginning. 90% of your day. We had a day in here where we traded live for the entire classroom, the NASDAQ on TradingView, and we took 2 trades. We had 2 instances where the rules were met. Guys, that's not, hey, good morning, John Novak. That's not typical, but it is a possibility. So we are professional waiters, to quote my brother, and the people that get really good at doing nothing when there's nothing to do are typically the people that find the most success. 10% of your day will be actively trading, guys, and when your advantages are in place, you will, through repetition, through study, through practice, you'll get into a position to where you never hesitate. and you get excited about these entries and you can't wait to get in because, guys, when the rules are met, hey, good morning, Sid. When the rules are met, you have an edge, you have an advantage, you have a pattern that you can prove wins more than it loses. And if you focus on your chart reading before you focus on your profits, you're going to understand through your reading where the market is likely to continue, where it's likely to go, where it's likely to stop. And these concepts become ways to enter, ways to manage, and then even most importantly, guys, ways to embrace the 90%, believing that you don't have to be in every move to find success as a day trader. You will see in the arena of day trading, and you will be able to identify 3 different types of trades. I teach a high probability trade, guys, when all indicators on all charts align with the rules for the trade. This is the best of the best, guys. This is your favorite meal at your favorite restaurant with your favorite person on the most beautiful night you've ever seen. This is bells, whistles, unicorns, rainbows. And this is a trade that sets up, maybe depending on the market, 4 to 5 times a day on a solid day. But once you understand how to identify a high probability trend trade, you magically can recognize a medium probability trade. And this will be the majority of your trades, guys, where most of the indicators align, but there will be small issues, maybe one advantage gone. And then you'll also be able to identify what we consider to be a low probability trade when there's conflicting signals reducing the chance of success. And then you'll have to make the choice to say, hey, this is low probability. I don't want to be a part of it. I teach 3 advantages, guys: momentum, path, and entry. Understanding what direction the market is going, being able to identify that it's going that direction with strength, that there's absolutely nothing in the way, and then defining an entry. And when these 3 advantages are present, you are in that high probability scenario. And as they begin to go away, the likelihood of success goes away as well. Now, you are in control of the entry. Nobody can make you enter the market, guys. I want you to embrace that you are in control. Because when you believe that the only person that can get you in the market is you are going to start looking at these advantages. You're going to know what's good, what's not, what's working for you, what's working against you, and you'll start to make decisions that are rooted in ideas of momentum and path and defining entry, rather than taking trades that are rooted in, I hope it goes this way, I need to make this money, guys. Understanding what's working for you and against you is going to dictate entry. It's going to dictate management. So every day in this room, we talk about TradingView, we talk about Ninja Trader, and I teach you the rules for the best of the best trade. I lay that foundation for you from which you'll grow. Everybody in the room can simulate, guys. Simulator, for some of you, is a negative. Oh, I don't want to be on simulator. I don't have a skin in the game. Guys, that's ridiculous. The greatest sports personalities in the world practice. They practice their mechanics. They practice their shots. They practice their defense, their offense. And they do it with a coach. So simulate as you learn, guys. Practice learning these rules. Be willing to make mistakes. And the first step in getting to where you want to be ASAP is post in the room. Have the courage to say, hey, Mark, this is what I did. Check it out. Paul, that was very timely. Mark, I noticed that the 15-minute was up strong. I noticed that the path wasn't clear, and I decided to take the trade. And then, Paul, what was in the way? You said it's not clear. I'm not sure what you ran into. I see a line. Oh, yellow one or pink 1-to-1s. And you went right into them, and sure enough, they stopped the market and made it bounce. So there's a coaching moment on not trading directly into areas here, and that's one of the rules. And when we get into the chart reads, we'll talk about those, and we'll go a little more in depth. But guys, have the courage to do it. And the people that post the most typically get to where they want to be the fastest. The goal is that you're trading the correct rules, that you're focused on advantages, that you're not omitting 1 or 2 of them, and utilizing hope and practicing the wrong trades and finding success on the simulator when you're breaking rules is what we call a short-term victory. The dopamine kick is real. It's a lot of fun. But when you go live, it's very difficult to reproduce luck. So post in the room, guys. I am as warm and fuzzy as they come. I'll give you all the feedback. And every time you post, it's a private session. And then simplicity tends to yield results, guys. you've got to learn the look that you're going to commit to. I mentioned patterns in the beginning. The high probability trend trade on NinjaTrader is a pattern. It is recognizable, it is repeatable, it is testable, it is verifiable. And you can go back and study it and you can prove to yourself that that pattern wins more than it loses. That's what creates the edge. The entry for TradingView is just a pattern. It's a series of events that are described through rules that you can repeat, that you can test, that you can practice, that you can receive feedback on. So your job will be to learn the looks, guys, because when you learn the looks, the market slows down. When you learn the looks, you begin to trust the looks. And when you trust the looks, you don't hesitate when the rules are true. So the way to do that is use the spreadsheet. I dropped these in the room as well. There's one for NinjaTrader that outlines the 3 advantages that create a trade. There's over 500 pictures of client trades there. I've had a lot of time to steal them from you guys in the room. Start going through, looking at those patterns. There's a place to build your plan, and there's a trade tracking sheet. And then if you're looking at the TradingView one, guys, it's the trend trade, it's the momentum trade, it's management, it's termination conditions. A place for you to put your pictures, to build your plan, to find your way, and then a trade tracking sheet as well. So my hope is that you'll use that trade tracking sheet, that you'll track your real-time performance. And then even more importantly, guys, aside from posting in the room, one of the most valuable habits you can get into as a brand new user is wake up and look at what you did yesterday and ask yourself what worked and what didn't work. And be honest with yourself. If you made a mistake, say, I made a mistake. Don't say the market's against me. And what you'll notice is if you're doing that on your spreadsheet where you're tracking your trades, you're going to start to see patterns of things that are bringing you success. But you're also going to see patterns of things that might be taking that success, guys. And the things that don't work, that you continually repeat, that's your thing. My thing, as a brand new user, was trading into termination conditions. I would trade into areas that could stop the market like they didn't exist. And I finally got the coaching when I had the courage to post in the room to get the feedback. And I wasn't told, hey, Mark, you're doing it wrong. I was told, hey, Mark, here's how you fix it. And that's exactly what I promise you guys. I will teach you how to fix any issues that you're having. I just need you to show them to me. After 4 or 5 pictures, we'll know what your thing is. We'll come up with a plan to fix it, and then we move forward, guys. There's this Japanese philosophy called Kaizen, and it means 1% better every day. Let that be your focus. 1% better every day. Don't put the pressure on yourself to be a professional trader inside of the first week. It's unrealistic. But you can grow and get closer to your goals each and every day with practice. By the end of the first hour, you will have all the tools that you need to find success with the software. You'll be able to test it historically. You'll be able to prove or disprove the methodology that I'm teaching. And my hope is that you'll put the effort into disproving it, because when you do that, you will be with me forever, guys. Because when we talk about the high probability trend trade, and we're going to start with NinjaTrader, this is 3 rules that describe a pattern. And the pattern is using momentum, a clear path, and an entry area. These are your 3 advantages that create a trade. I want you to start thinking in terms of advantages. When you look at your charts, I want you to say, I have or I don't have. And if it's 3 I haves, guys, it's the best of the best. These 3 rules take 2 charts. That's it. We're thinking about 5 things really, guys. Your large chart is a big chart, a slow chart. It's like a broad stroke of a brush. It shows the overall opinion of the market. It's very difficult to see change on this chart because it is so slow moving. It takes the first bar, the most current bar, 1 bar, to define direction, momentum, and areas. Rules 1 and 2 are met using only the first bar. And you'll actually make a decision to go look for an entry when the market in a downtrend is very low, and you're like, oh my gosh, it's gone without me. That's where the refinement chart comes in, guys. When the first 2 rules are met, on your smaller, faster chart in the perfect trend trade, you will see a retracement. That retracement is a small movement counter to the underlying trend. You will typically see a bounce from an area, and you will see continuation. And the yellow box that surrounds the 1 bar is the same yellow box that surrounds 20 to 30 bars. It's this refinement process that allows you to reduce risk, and it's this refinement process that allows you to maximize profit potential. And the high probability trend trade is a repeatable pattern. So we're learning patterns today, guys. And we're using two charts because two charts are really a representation of who's in control and who's not in control. The large chart wins, guys. The large chart is the large crowd. These are the men and women with the power, with the influence, with the money, with the charisma, however you want to say it. They create trends and they establish momentum and they react at key areas. And 70 to 80% of the time, they're victorious. So the methodology is designed to have you riding along with the large crowd. Now your small chart is like a small crowd. These are the ne'er-do-wellers and they like to fight and they create that little retracement. And that little retracement goes right to its failure point. And when they fight the large crowd, they do typically fail 70 to 80% of the time. Your rule number 3 pinpoints right where their failure is most imminent. And that becomes your entry for the high probability trend trade. So we rely on some push so that we can go with the flow. Both charts have areas. This is your little indicator review. I do want to go to the website real quick, and I want you to know that everything that I talk about is here, especially if you're brand new. So if you haven't taken the time to go look at the indicators, I'm going to do a quick review without a doubt. But John Novak put together an outstanding video, especially for you folks that like the whys. There's your indicator introduction video. And everything that I talk about is laid out right here on the website. There are no secrets with Nexgen, but we're going to talk about areas, guys. Areas are, in some cases, Fibonacci-based indicators. Sometimes they're moving averages. Sometimes they're momentum indicators, letting you know that there was a loss of momentum, and they all have names. So divergence highs and divergence lows. Anytime you hear the word divergence in my classroom, it means that there was a loss of momentum. For the visual, the buyers are in control. The sellers stop them, steal their momentum, and push the market down. You'll see a magenta line, and all it means to you is, hey, there was a loss of momentum right here. Same thing at a low. You'll see Fibonacci resistance. This is one line that is created from thousands of calculations, going back historically, projecting forward, higher time frames, lower time frames, and thousands upon thousands of calculations create these areas. Areas of resistance, which are red, areas of support, which are blue. There are the same calculations running in the moment, and these yellow 1-to-1s are what we call 100% Fibonacci alternates. They can behave as resistance. They can also behave as support. Mid-band runs through the middle of your screen, guys. It's a moving average. If price is above it, it's green. It may behave as support. If price is below it, it turns magenta. It may behave as resistance. These are areas. So anytime you see a line on a chart, it's an area. Learn the names because they have very distinct roles depending on whether they are a large chart or a small chart. You're also going to have trigger lines, guys. These are moving averages. There's a fast moving average. We call these the small triggers. It's 2 solid lines. And then there's a slow moving average. These are the dashed lines. We call these the large triggers. And that's really all you need to know about them. Triggers, excuse me, will define momentum. Triggers will define what we call termination conditions, areas that can stop the market. They'll let you know if an area has the potential to hold, to reverse the market. And these large triggers are how you're going to pinpoint your amazing entries. You will be learning to read trigger lines. And we're going to do it with 3 rules. That's it. Don't make it harder than it needs to be, guys. And I'm very right-brained. And I teach this classroom with the assumption that you have absolutely no idea what's going on, that you've never been here, that you've never done this, that you don't understand the language. So I lean on words a lot. I lean on language a lot. But I'm going to give you this warning. And I don't even know if it's a warning. I just want to remind you, as you learn the language for the first couple days, there's a lot coming at you. By day 3, and I say this with the utmost confidence, by day 3, all that language starts to fall into place. By day 3, you begin to recognize these advantages. And by day 3, there's no doubt in my mind that if you're paying attention, you'll be able to pinpoint some entries, and you'll be able to go back and evaluate software, and you'll know what you're looking at. But we're going to start on the large chart, and we're going to start with strong trigger lines, because strong trigger lines create momentum. And guys, it's the easiest lesson I could ever give. If the background on your large chart is green, you're in an uptrend. You're looking for rules to be met for high probability trend trades long. If the background is red, you're in a downtrend. You're looking for rules to be met for high probability trend trades short. The only way you can have strong triggers in an uptrend, I'm going to draw a little bit, is if your small triggers, your large triggers, and your background are all green. And in a downtrend, the background is red, the large triggers are red, and the small triggers are red. Strong triggers is one look. So in an uptrend, your small triggers break above and away from the large triggers, and it's the space that's created between the two. That's what lets me know these triggers are strong. And I want you to picture scissors. That's right, we're getting artsy-fartsy today. I want you to picture scissors that are open. And open scissors can cut, can get work done. In a downtrend, the smalls are below the large are wide, there's space between. Once again, the blades have separated, the scissors are open, and you can cut. And guys, you're going to see this look on the very first bar on a large chart. Either the scissors are open or they're not. And in this case, the scissors are not. There is no momentum here. What we have is what we call weak triggers. When your scissors close, when the small triggers return inside of the large triggers. This is weakness, which very conveniently is the opposite of strong. When you have weak triggers, anything can happen up or down. This is where the market may retrace from the middle of nowhere, not at a key area. This is where key areas are more likely to hold. When you have strength, the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum is a phrase that's been used in this classroom for years. Odds favorable momentum should paint a picture in your head. Strong triggers. You should latch on to the idea that strength is power, that it's an advantage. Strong triggers push a market. Strong triggers can break key areas. And guys, strong triggers can even cover some of my mistakes when I choose to make them. Miss Adriana, good morning. You're here with Sergio taking your class? I love it. Good morning to both of you. So guys, strength and weakness. Rule met, rule not. That's the very black and white approach if you're a brand new user. As you grow, I wanted to put this in here. I added this into the PowerPoint because guys, I don't hold you back to the best of the best. From your understanding of the best, you will grow. Hey, good morning, Justin. Odds favorable momentum, strong triggers, the best of the best look for short trades. And as the momentum decreases, guys, you'll notice that one line of your small triggers breaks inside of the large. This is a visual where you can say without question, I'm losing momentum. This is the first sign of momentum slowing. I can still take short trades with some reps under my belt. I may have to manage them a little bit. I'm going to make sure that all my charts agree. And then with weakness, you will get to a point to where you're like, I know that it's weak, but my path is still clear. I can define an entry. I choose to enter the market, but I'm going to manage it assertively because I know anything can happen up or down. And then you will get to a point where you see weak triggers at Fibonacci support and you just don't want to be a part of it because termination conditions can stop the market. And that's kind of my segue to rule number 2. But I like to ask, does that make sense on rule number 1, guys? It is one look. It is separation, creating strength, or it is no separation, letting you know that there's weakness, guys. Keep it that basic, and don't be shy about answering when I ask a question. It makes me feel good. I don't feel so all alone. Guys, momentum is awesome. Momentum pushes a market. Momentum breaks areas. Momentum covers mistakes. Momentum is rule number 1 for a reason. But termination conditions can undo all of momentum's hard work. Termination conditions are Fibonacci-based indicators that may reverse the market. That's the clinical definition, guys. And when there are none present, you'll have room to profit targets. And we're just going to call it a clear path because who wants to type all that out every time you're looking at a chart? So a termination condition is dependent on the large crowd getting to the area that may stop the market. So there's a two-part process to identifying a termination condition. If you're a note taker, grab your crayon. Here we go. The first step is that price reaches the area. So price reaches an area of resistance. It can be a red fib, it can be a yellow 1-to-1, it can be a divergence high. When price reaches, when your dynamic Renko bars get to resistance, that sets off the decision-making process, guys. That is when the large crowd, the men and women who control the market, the big dogs, the money, the institutions, the 1%, I don't care what you call them, they make decisions right at these key areas. And we know they make decisions at these key areas because they've already made them there. That's what creates Fibonacci. So when price reaches an area, you're going to count trigger lines, small and large, and you're going to ask yourself, where are my triggers? And guys, if all 4 trigger lines remain below that area of resistance is a textbook bona fide termination condition. A termination condition could create a big, ugly, untradeable bounce that pulls you out of a long position. A termination condition could break, the market could go right through it. The termination could also create a full reversal. And the reality is that you'll never know what the reaction is going to be. And I want you to avoid phrases like, it should, I think it may, right? If price reaches and triggers don't break, none whatsoever, absolutely no trades into the area. Wait for the reaction. That's where your highest level of success comes from. And then if the market pushes down and it reaches Fibonacci support, yellow 1-to-1s, divergence low, all you have to do when price reaches is say, hey, where are my triggers? And if all 4 trigger lines remain above Fibonacci support is a termination condition. And guys, it's not price getting through an area, it's trigger lines that will tell the story. Does that make sense so far? Are we doing okay? If price reaches an area, there it is live. And all of the triggers remain above. Let me make this big so it's not so confusing. Absolutely no trades into that area of support. It may stop the market. It could stop the market. It could create a big untradeable bounce. And look at this. Right at resistance to the tick. Also to resistance. Fibonacci support. Yellow 1-to-1s. Fibonacci support. Fibonacci support. Do you guys see it? And what's going to happen with just a little bit of study is you're going to believe that there's absolutely no reason to trade into an area. Wait for the reaction. But they do break. They break all the time, guys. Otherwise, we'd be in a range. So I'm going to show you, we're going to go through the process of what it looks like when it breaks, both short and long. First, price reaches the area. Trigger lines remain above. It's a termination condition. Can you guys give me a why? If you can at least recognize in the moment, it's best to wait for the reaction. I ask you guys for feedback every now and then because if you're unsure, I want to know. I want to tell you. I want to go find more examples. I want to do more for you to get the understanding. Price bars hit Fibonacci support. 4 trigger lines remain above. It's a termination condition. Wait for the reaction. And then strong triggers break things. I love that phrase. Guys, if your small triggers absolutely smash through Fibonacci support with that momentum and the large triggers remain above, we call this a 50-50 look. This 50-50 look is the second trade on your plan that I give you. And the 50-50 look lets you know that this area has the potential to break, but it's still just potential. It's not a broken area. It's not a clear path. It's not a high probability trade. But this medium probability trade will probably be the majority of your trades. And the potential goes up dramatically when 3 trigger lines clear the area of support. Not the price bars, but the trigger lines. And then once 4 trigger lines get below that area of resistance, support. Once 4 trigger lines get below, well, now support is broken, and now the path is clear. And what you'll see is that support very often behaves as resistance. And your path remains clear until you reach the next area. Rule number 2 remains in play until you hit the next line. And when you hit the next line, you're going to go back to number 1. When the market's going up, not a coincidence that it came from Fibonacci support with no triggers through. First, it's a termination condition. 4 triggers below, I choose to wait for the reaction rather than try to predict the reaction. Guys, my prediction abilities are worth nothing. I've learned that through an awful lot of losses trading into these areas. With momentum, small triggers smash, 3 triggers through. Let's embrace the idea that we can find a lot of success trading the potential of that area to break. This is your second trade, and when you understand momentum and path, it becomes easier to take. But once all 4 triggers get above resistance, the path is clear. And when the path is clear, it remains clear until you reach the next area. And guys, I want you to remember that momentum is separate from termination. So the easiest trades you ever take will first have momentum, separation between the small and large. And if that momentum is present, I'll make sure that price didn't reach an area, and I'll make sure that my triggers have cleared the previous area. And that tail with the yellow arrow, that's that pullback on the smaller, faster chart. Guys, you're going to pinpoint right where that tail is most likely to form with rule number 3, and this becomes your entry. So when an area breaks, we can have a clear path. When an area stops the market and reverses it, we can have momentum. In the same language lets us know that we have a clear path. Price has not reached an area, nothing in the way, room to targets. That tail is the easiest trade you will ever take, guys. The highest probability trades happen in between Fibonacci with momentum. And I added this in for a reason, because when I talk about 90% of your day doing nothing, guys, this is one of the things that's going to cause it probably more often than any other. There's going to be times where your path just isn't clear, where it's multiple fibs, divergences, one-to-ones, whatever it is. You just won't be able to get that rule met. Rule number 2 stays just elusive. This is 90% of your day. Be patient. Guys, the futures markets trade an average of $220 billion hourly. For U.S.&P traders, they exchange about $174 million a day. For you NASDAQ traders, it's about $269 billion a day. It takes $400. $400. That's it. I love showing you guys this math. $400 a day times 252 trading days is a 6-figure income before taxes, commissions, right? But if you can consistently find that $400 to $500 a day, guys, you can change your life. You don't have to be in every move. You don't have to be the first person in. You don't have to be the last person out. Grab a couple of the good ones. Whoops, where'd that picture go? There we go. Well, it's not coming up. There it is. Learn to catch the best trades, right? Learn to be patient. Learn to be discerning. Almost be a little stingy with when you're willing to pull the trigger. And what you'll find is that life gets pretty easy for you. So large chart has momentum, and you can say to yourself out loud, the odds are favorable for this market to continue in the direction of the trend. And the market, large chart, has no termination conditions. There are no areas in the way that could create a bounce, stop, reversal. It is a clear path. Guys, when this happens, oops, that's the wrong picture. When you have momentum and path, and I want to go to the one that shows the large chart, the large crowd, because this is how we're going to define our first entry. When the large chart says up, when the momentum is strong, when the path is clear, guys, you have everything that you need from the large chart. So what you're going to do is let the small crowd fight. You're going to hope that they fight. You're going to wish that they fight. You're going to get excited about their fight. Because rule number 3 is designed to pinpoint right where their fight is most likely to be lost. How do you get this set up on NinjaTrader? Justin, whoa, and hey, what's up, bot? Are you working with someone yet? Have you signed up with a demo? I want to see where you're at in the process. Yeah, cool. Then you should have everything that you need. Do you have NinjaTrader open right now? Oh, just on TradingView. Do you have NinjaTrader downloaded? Yes, cool. So here's what you're going to want to do. Who are you working with, Justin? And I'll send a note over to him as well. And I'll send a note out to him and let him know that you want to see NinjaTrader as well. And they'll probably call you, get you with tech, get you loaded, get you everything that you need so that you can see this and do this. When you signed up for your demo, somebody should have called you. Maybe Chris or Cam or Mark or Jim. Has that happened yet? Chris? Cool. I'm going to let Chris know right now. There we go. I just did it. He'll give you a shout. Let's get you loaded up so you can take a look at it. Why not? Evaluate both platforms, right? Maybe one speaks to you a little louder than the other. And I would just expect that call, or if you want, just give Chris a call and he'll take care of you. Yeah, no worries, man. This is what we do. All of us, well, not all of us, but my brother and I and his wife, we spend a lot of time in the service industry. We love customer service. You'll never want with us. If you need, you will take care of it. So, guys, let's go through the idea of finding an entry. And your entries are specific. They are very specific. Or if you're a 4-year-old, they're very specific. You're going to use a limit order to buy or sell a pullback at an area inside of triggers. And if you use that language, if you write that language down, if you commit to that language, I'm going to use a limit order, which means I'm literally going to wait for the market to come to me. I will call my shots. And I'll know exactly where that limit order belongs because there's only one option for the high probability trend trade. It'll be at an area, and that area will be inside of triggers, guys. And your entry pattern looks like this. You will buy, because it's up, a pullback. That's that small movement counter to an underlying trend. You will wait right at an area, at a fib, at a midband, at a yellow 1-to-1, because the same way on a large chart, those key Fibonacci areas can stop a trend. On the small chart, they can put the brakes on the small crowd and send that market rocketing in the direction of all the large chart advantages. But here's the kicker, and I think where the accuracy and the amazing stuff happens, is you want to see those areas inside of these large triggers, guys. These large triggers are moving averages. I don't know if you remember that. There is a phenomenon in the mathematical universe, and it's called regression of the mean. And I had actually a Nexgen user teach me that. And regression of the mean means that when price pulls away from these large triggers, it tends to return. And these large triggers will define where that pullback is most likely to go. And the areas inside will define exactly where that market is most likely to bounce. And guys, it's this level of accuracy that's going to allow you to really minimize risk and to really maximize profit potential. So when the large chart is up, when the large chart has momentum, when the large chart has a clear path, I can't stress enough, let the large chart lead the way. Your small chart is, I'm going to do it like this real quick. Your small chart, whoa, wrong one. Bonk. Get over here. Your small chart is going to be about here. And you're going to feel this little gnawing at your guts that says, oh no, they're going without me. Oh no, I'm never going to get paid. Oh no, Nexgen, grrr, can't stand Mark Novak. And then the pattern starts, and it happens. And you guys that are used to jumping in out of fear, you know how often this pattern starts. Typically, right after you jump in out of fear. So a reversal bar begins the entry pattern, guys. This is the small chart fight. And the reversal bar is not your entry. What it is saying is, hey, you know what? Let's get that little push down. Let's get that little retracement counter to everything that the big crowd wants. And you can define right where the retracement is most likely to go. Most likely, most often, very probable, not guaranteed. somewhere from the top of those large triggers to the bottom of the large triggers. And there's two sets, one from the large chart, one from the small chart. Guys, this is your retracement zone. But trigger lines aren't bouncy. Trigger lines, hey, what's up, Cav? Good to see you. Trigger lines only define the retracement. It's the areas inside. Fibs, midbands, or yellow one-to-ones. These are the brick walls, and you're kicking a soccer ball, you're throwing a tennis ball, you're tossing a watermelon, I don't know. And it's the areas inside that are most likely to create the bounce. And it could be this midband up at the top. It could also be these yellow one-to-ones just a little bit lower, and it creates a window sometimes. We call it the window of opportunity because somewhere inside of that blue shaded box is where the market is most likely to ricochet and go off to the distance with those large chart advantages. So before that reversal bar ever prints, you'll see the triggers. You'll see the areas inside of the triggers. Your job will be to activate a limit order just above whatever area is closest to the reversal bar, the highest point of support. Because with momentum and path on the large chart, I'm not going to stumble over a couple pennies trying to save a few dollars getting in lower. Guys, this becomes your entry for the highest probability trend trade. And because you have defined where the market is most likely to retrace, because you've defined where the market is most likely to bounce, you have, without even realizing it, defined where the market shouldn't go. And where the market shouldn't go is where we put stops. Because if the small crowd can blow right by the area inside of triggers, if it can smash through the next area inside of triggers, if it can break below where the market is most likely to retrace, guys, we're going to sit there with a stop and we're going to say to ourselves, I accept this loss. Because any pattern that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. And you will never know whether you're going to take a winner or a loser. But the execution of the method, the consistency in trading the pattern is what sets you up for that long-term success, because it is difficult to win 70 to 80% of your trades and not be in profits. It's possible, I've seen it, but it's not easy to pull that off. Guys, the idea is once you get below the triggers in a long trade, rule number 3 is no longer in play. I don't want to be in that trade anymore. I no longer have an edge. So you're going to learn to ignore areas beyond the triggers, and you're going to say to yourself, I don't want to enter on the wrong side of the triggers, because once I get below them, my advantage is gone. My edge is no longer present. And honestly, you don't know if, when, or where that market is going to continue up. For those of you that are new to futures, welcome to the greatest thing you could ever do. Let's make money when the market is going down. So when the large chart says down, when the large chart has momentum, when the large chart has a clear path, that poor horse is getting beat. Your job is to wait for a reversal bar. And guys, with a little bit of practice, you'll call your shots long before the reversal bar. But when it prints, I can say without hesitation, the market is most likely to retrace to the large triggers, somewhere from the bottom to the top. I don't know where, but that's my retracement zone. But triggers aren't my entry. I need an area. I need a fib. I need a midband. I need a yellow one-to-one. One is not more important than the other, guys. I need an area because that area is most likely to create the bounce. This is one of those magical moments. There is one line inside of triggers, guys. The decision-making process is effortless. Your entry comes from a tick or two below the lowest point of resistance inside of triggers. Anything beyond the triggers, advantage lost. Anything above the triggers, you don't have an edge. You're not looking for a trade up there. And what you're saying is that I'm willing to take a small loss if the small crowd can push beyond everything. And I want you to see something. My brother sent me this picture this morning, watching NASDAQ. Just about patterns that repeat themselves, guys. First, it's momentum. 3 triggers through. Perfect entry right at the area inside of triggers. And because he knew where his advantage was lost, He has $150 risk on this trade. Guys, that is the perfect trade. And the CEO of the company, the guy that wrote the software, the gentleman who shows up in this room and gives educational material all day, every day, takes the exact same trades that we just talked about. How do we study it? How do we build trust? Guys, this is going to be the most important lesson that you could ever get that doesn't involve actually getting in the market. You can study this trade historically. You can build trust in this idea. If you look at a large chart and you see momentum and path, let's open up a large chart. Termination is still holding. There we go. If you have momentum and path, or at least the potential to break, there's a great example from yesterday afternoon. There's one of those tails, guys. All the momentum coming from a termination, potential to break. Good morning, Bajoy. Does everybody see it? What a good look, right? What a great look. All that momentum. Termination condition reverses the market. There's a huge push with the potential to break. What's it look like on the small chart? Let's go find out. I'm going to back it up. We're going to find that circle. And that circle, well, there's actually two of them. The first one pulled right back to an area right in the retracement zone. Do you guys see it, Kaoin? And we've got, who else is new in here? Mahesh? Guys, PSP 116, because it sounds cooler when you say it like that. Guys, this is a pattern that you can predict. This is a pattern that you can recognize. This is a pattern that you can test. And actually, they came back for you right at the areas in the retracement zone, just in case you missed the first trade. This is a trade that repeats throughout the day. This is a trade that's rooted in advantages. This is a trade that shows you precisely where to enter the market. Now, guys, if you put the pressure on yourself to be an absolute rock star at this on day one, you're going to be disappointed. But it is testable. It is predictable. It is identifiable. And it is absolutely amazing. And you just got to learn to trust it. So, guys, I encourage you, go back and do that study. You can do it on every workspace that you own. And don't focus on what happens next. Focus on having the rules met. Learn the language of the rules. And now, because I mentioned patterns earlier, this is the tracking sheet that I dropped in the room for you guys. And if I go to the client trades, I'm going to pull it off screen so that I don't have to go back and forth. This client trade says perfect trend trade short. Strong triggers, no termination conditions, entered at an area inside of favorable large triggers. Guys, that's your pattern. This particular trade is from the June contract in 2023 on the S&P. The S&P was trading around 4,100. This one typically wins 70 to 80% of the time. Strong triggers, potential to break, pull back to an area inside of triggers, and down it goes. This one was crude oil, not even the S&P, but it's the same pattern. We'll do one more. Strong triggers, clear path, pull back to the area inside of triggers. Guys, this is from 2022 in the spreadsheet. So does the software work? Yes. But Ron said it yesterday. I'm going to repeat it today, guys. You could have the most high-tech elliptical ever in your basement. If you don't use it, if you don't learn how to turn it on, it's not going to give you results. So guys, what we're doing is we're learning how to find the results through simplicity. We're learning how to find the best trades first so that we can find more trades. Are there any questions about the high probability trend trade? Any questions about the look of momentum, that separation? Any questions about counting triggers to identify a termination condition? Any questions about pullbacks to areas inside of triggers? Guys, it's three things on two charts, creating a pattern that typically wins 70 to 80% of the time. You have everything you need. Now we just got to practice it. There's also TradingView. This is the other platform, guys. And I'm not really biased to one or the other. Last week I traded TradingView. This week I'm trading NinjaTrader. I like to keep it keep it interesting. But the reality is it's still just patterns. And what you're going to notice on TradingView, if you're making the switch from NinjaTrader, there's a couple very subtle differences, guys. When we talk about the indicators that you're going to see on TradingView, there's still all of those cool one-to-ones and trigger lines, divergence highs, divergence lows. But you'll notice that there's the absence of Fibonacci. John Novak is working with programmers trying to get those fibs on there. Until we can, because we look for solutions, not just whine about problems, there is supply and demand. And there's some similarities between supply and demand and Fibonacci. It is areas of support and resistance that are determined by historical movement. So the market tends to react at them because the market created them. There's a company called Chart Prime. Chart Prime offers supply and demand zones. They're the best we found. It's about $50 a month. If you're like, man, Mark, I'm just evaluating, I don't want to drop that kind of money, let me know, because there are some free versions, and the Algo Alpha, I don't think it's quite as accurate, but it will be a reasonable facsimile as you evaluate the software. It'll give you something to not trade into or to trade from. But TradingView has a different bar structure. NinjaTrader uses dynamic Renko bars, the Nexgen dynamic Renko bars. They are very linear, they're very smooth, they are all exactly the same size unless you get a reversal bar. It smooths things out. I'm a fan of Renko bars. We started with minute bars in Nexgen. Nearly 30 years ago, Nexgen started teaching with minute bars. So we use them on TradingView because we can't get Renko bars. Your large chart uses a 15-minute bar. 15 minutes is a long time. Almost a quarter of an hour. 15 minutes, you can have 100-point swings in 15 minutes. So we are going to use it for direction, momentum, key targets, and terminations the same way we would on NinjaTrader, but we're going to change a few things on how we read it just because it's so stinking slow. In the plan that I gave you, and I'll show you where it's at just so you know, and if you need help, let me know. There's some workspaces that I put in there, and on those workspaces, I've removed the large triggers from the large chart because honestly, they're not a necessity. Do you like that? I was hoping somebody would catch that. The large triggers, you really don't need them. It's so slow. And I also took off the background colors because I don't want you old NinjaTrader users going, hey, the background's red, I have to go short. The background's green, I have to go long. So no background colors on either. No large triggers on the large. It just simplifies. It takes the noise you don't need off of the chart. Your 1-minute chart defines immediate strength and entries. And the same way, it's the large crowd, the people in charge, creating the big look that you want to be a part of. And then it's the fighters that take you right back to the perfect entry. So when you're reading a TradingView large chart, I've broken it down into 3 things. This is the exact same picture. This is this spot, is this spot, is this spot. Direction is defined by the small triggers, not the background color. So they can either be down or they can be up. And for the brand new user, you are encouraged to let them be decidedly down or decidedly up. If they're only aiming right, if they're flat, direction is difficult to discern. The second question, because these bars are so big, is you're going to ask yourself, where's the current price? Where is the now in the moment in relationship to those small triggers that I have already identified as up? 3 options. You can be left, you can be right, you can be inside. In each location defines momentum, guys. So when you are left of the small triggers, below them, or when they're down, above them, when they're up, you're on the strong side of those triggers. And the strong side is the odds favorable momentum. That's where bigger moves tend to happen. That is where 1-minute areas on that smaller, faster chart are more likely to break. So the recognition of the strong side, not only does it make you feel good about the momentum, but it sets you up for management. If I'm on the right side of the triggers, below the triggers in a long trade, above the triggers in a short trade, I'm on the weak side. And from the weak side, you're still looking to trade with the direction. Have a great day, Mrs. Novak. But this is where your management hat gets strapped on extra tight, guys, because from the weak side, that's where reversals come from. So 1 minute areas are more likely to bounce. This is where fast profits are taken, where you kind of abandon hope and your management becomes aggressive. And now if you're inside of the triggers, if the most current price is trading inside, this is your transition. This is where most of your trades are going to come from. This is where when price reaches a 1 minute area, you may take partial profits. You may get to break even. This is kind of the biggest, the medium probability. This is where you're going to see the most. And you're just going to say, I'm going to get paid, I'm going to protect myself, but maybe it's going to go further. I'll read my indicators because, guys, in one bar on the 15, you can have weak, you can have transition, and you can have strong, all during one bar. And then the final question is, hey, do I have room to targets? You're going to see this as a recurring theme in the room. What direction is the market trading? What do my indicators say about the momentum? Do I have room to targets? Momentum and path, guys. And if the answer is yes, outstanding. Let's go look for an entry. If the answer is no, give yourself permission to wait until it's yes, because the biggest killer of accounts from people in this room seems to be trading into areas hoping that they break. So room to targets is the first rule on both of the trades that I'm about to share with you. The first trade is the trend trade. This is the 90% of your trades trade. This is the trade that requires patience, but that patience typically pays dividends. I took an entire week taking nothing but trend trades once. I ended up in the 73% range following this checklist. Your results may vary based on the choices that you make, but it's very similar to the high probability trend trade on NinjaTrader, guys. And it starts with a clear path, making sure that the 15-minute is not trading directly into areas. And then it reasserts its demand of a clear path. Don't trade into areas on the 1 minute. A lot of times I hear people saying, well, because I'm on the strong side, I'm going to trade directly into these areas because they have to break. They don't have to break. They're most likely to break. Your highest chance of success comes from not trading directly into areas. And then finally, you're just going to buy or sell a pullback at an area. That sounds familiar, but we don't enter at the areas, guys. Rule number 3 says that when you get to the area, you have to wait for a close. So when the large chart says up, it's in transition, there's room to targets. I'm looking at my small chart and it's over here. And the moment my small triggers on the 1 minute pinch and turn down against the underlying trend, this is my indicator that I need to look lower, that I need to wait for a pullback to an area. And if you don't have an area, you didn't get a pullback to the area. The language is very specific. But when it reaches these yellow 1-to-1s, I'm not just jumping in. What I'm doing is I'm waiting for a close on the correct side of the triggers. And the correct side of the triggers is the weak side of the triggers, because the weak side of the triggers is where reversals come from. And when the large chart says up and there's absolutely nothing in the way, that close on the correct side of the triggers more often than not is where the market continues up with the large chart. So it's the same concept. From the weak side of the triggers, reversals are imminent. When you bounce off of something, it gives you direction. When the large chart is down from the strong side of the triggers, room to trouble. I want you to get in the habit. Repeat that every time you look at your charts. What's my direction? Where am I in relationship to the triggers? Do I have room? The answer is yes. The market's probably all the way down here. And you're saying to yourself, well, I know I can't just trade into areas. My small triggers rolled against me. Let me look higher. Let me turn my attention to where the pullback needs to go to get me in. And guys, sometimes you'll wait 12, 14 minutes for it to get there. Very often it gets there. And you're not just jumping in when it hits or hits the second time, or you start to get scared or you're worried, your entry is very specific. It is a close below the small triggers. It's a down bar because that close on the weak side of the triggers with room to trouble is where the trend trade starts. And guys, waiting for the close will be the longest minute of your life. But if you try to anticipate the close very often, you get run over. That was my thing later in life. There's a timer on the 1 minute. It'll help keep you patient, guys. And if you're a jumpy kind of trader, TradingView slows you down a little bit, I think. The second trade that I'm going to introduce is actually the trade that typically happens before a trend trade. And a momentum trade relies on momentum. I can't stress that enough. It's right there in the name. So nothing in the way on the large chart. Recurring theme, room to targets. The 15-minute must be on the strong side. And guys, this is for new users. This is the best of the best to optimize your chances of success. You're going to find that in time, with some study, with some practice, with some repetition, that rule tends to go away. The 1 minute must have strong triggers. It must have the exact same look that we talked about, separation between the small and large. So when the smalls are up, when you're on the strong side, when there's absolutely nothing in the way, when you have strong triggers, you're going to let an area break, and then you are going to buy that quick little snapback to it. Price bars get away from the area that used to be resistance. If it snaps back, we're hoping it behaves as support with all that momentum to push it. This is the only trade where you use a limit order. You don't wait for a close. You let it get there, and you are in that trade. And your stop is a little bit below the zone that you're hoping holds. And guys, this is about 10% of your trades. And when it's down, when it's strong, when it's clear, letting the area break first and then pull back, that's what gets you into that momentum trade. Trying to take a momentum trade when it just peeks its head above an area, below an area, guys, these get run over a lot. When support breaks, it behaves as resistance. Until those bars get clear, it still has the potential to hold. Guys, this is a limit order. This is low risk. And when this trade fails, and it will fail every now and then, very often, it turns into the perfect trend trade. Because let's be honest, the trend is going, it's going strong and there's room. And when a momentum trade fails, very often, it just pulls into the trend trade. So about 10% of your trades is the momentum trade. Guys, everything that I've talked about is on the plans that I gave you, whether it is TradingView. Go to the second page. There's your checklist for entry. There's pictures of what it looks like. If you are looking at NinjaTrader, where's my NinjaTrader? 2 charts. There's your checklist. Everything that you need to find success as a brand new user. And I say that in the very beginning, guys. I will give you everything that you need. I gave you rules, right? Very clear rules, simple rules, easy to follow, identifiable, repeatable rules. That's the wrong picture. I also handed you a plan with checklists for entry that you can follow. Great entries create manageable trades, guys. Management is what's going to separate you from an okay day and a 32 flavors of kick-ass day. You've got the ability to simulate, to practice, to get feedback. You have spreadsheets to study, to put your own pictures in. You have analysis, rules, coaching. Now it's up to you. Now it's up to you to get the repetition. Now it's up to you to participate in the room. Now it's up to you to study the patterns. Just because I buy a hammer doesn't make me a carpenter, guys. I have to do the work to learn how to use the tool. And that's where we're at now. And that's where the next half of class goes, is we're just going to look at your pictures and we're going to talk about them. And the one thing that I ask, and I ask this every day, bended knee, guys, when you post in my room, I want to give you the best feedback that I'm capable of giving. In order to do that, I need to see your read. I need to know about momentum. I need to know how you read your terminations, and I want you to define your entry. And when you do this, what we're going to do is we're going to talk about your chart reads. We're going to make sure that you read them correctly. We're going to make sure that you saw any challenges that were present. If your entry could have been better, we'll talk about it. If your risk could have been less, we'll talk about it. If you could have held for more money, we'll talk about it. You get a private session with me, but it's imperative that you tell me what you see because we're learning to read charts. So on NinjaTrader, I want you to define momentum, path, and entry every time you post in my room. On TradingView, I want you to define direction, whether you were strong, weak, or transition, and whether or not you had room to targets. And guys, I can look at your chart and I know this. But when you write, when you annotate, when you describe the great things or the bad things that are happening, when it's perfect, you're literally writing a recipe for success. You're making it repeatable. You're creating a connection between what your eyes see and what your brain thinks. And if there's a challenge, you're also going to be able to self-diagnose. And you're going to say, man, I came back and I looked and that wasn't a clear path. It was only potential. I should have had my management hat on. So guys, do it for you, but also do it for me. And when we get to the second hour, I'm not going to play trade police. What I'm going to do is we're just going to talk about advantages. There's that news spike, kablooey. All right, Adam P., let's see. Morning, 2 questions. I need to reload my account for live data since I'm still on sim. Is delayed data just as good, just 10 minutes behind to practice, or do I really need the full data? I would say you need the full data. I really do. Could you imagine being in a fight and you were on a 10-minute delay? You would get your butt kicked before you ever got your guard up. Trading's no different. You need to be in the moment. Second, you have trade markers on, but they're not showing up on the chart. Any idea? I have all the ideas. Which platform are we talking about, Adam? NinjaTrader or TradingView? We can fix that easy peasy. NinjaTrader, awesome. So check it out. Right click, data series. At the very bottom, text and marker. Are you seeing them on one chart but not the other? Cool. So you have to do this for both charts. Because right now I think I only have it turned on one chart. So even though I got in the market, you can see that I only have my markers and my text on one. So I would have to go to my large chart and right click and go to data series. And then if I go to text and marker and hit apply, now you can see them there as well. I think, and this is only my 2 cents, Adam, and take it for what you paid for it, I really believe that since your entries are a small chart endeavor, because entries happen on the small chart, I don't believe that you really need to see them on the large chart. Because you can look at the large chart and it's such a broad stroke, your entry might look ridiculous. Oh my gosh, he caught it on a down bar, or oh my gosh, why is the entry there? But if you come to the small chart and you look at the small chart, you'll be able to see precisely, did I get in at an area? Was it inside of the triggers? Was it outside of the triggers? It's totally up to you, but that data series will make it work on either chart. But in regards to delayed data, it's just no fun because you hit buy now and it looks perfect. And what happens is your system is so messed up, and maybe you're even stopped out of a trade before you even visually see that you're in it. So I pay $12 a month for NinjaTrader data, and it's pretty much flawless for me. So I hope that's helpful. The auto trading enters on the large chart. No, so the auto trader won't plot. The auto trader won't plot. But you can see the plots on the small chart, I believe. John Novak can answer that for me, or you can ask a quick question to Tech, and I'm not sure. Would I know how to put a 34.5 reversal bar on the 33.2 chart? So check it out. Morgan, right-click and go to Indicators. And go to Synthetic New, T3 Fibs Pro Trader Synthetic New. And yeah, if you open a prop account, you do get free live data. So you can go to your reversal bar markers, reversal marker 1, reversal marker 2. I don't see a place to pick the time frame. So Morgan, I'm going to have to defer you to tech. I'm going to have to defer you to tech. Hold it. But we're talking NASDAQ, right? Okay, hold on. So if it's the NASDAQ, Morgan, I'm sorry. No, 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 no. I got you. Sometimes it takes me a second. I don't have NASDAQ open, but since this is 13.2 and 5.1, my reversal bar markers are 13.2 and 5.1. On NASDAQ, it'll be 34.5 and 13.2. So if you have show reversals on the reversal bar marker 1, show reversal price, that'll get you the one that's native. And then on reversal marker 2, it'll show you, you can show the reversals and show the reversal price, and it'll show up. And if I'm not mistaken, Morgan, that's hard to say. If I'm not mistaken, and very often I am, so careful when you quote me, it is a part of the template that goes in on the 13.2. It's definitely in the core workspace. And I'm trying to bring this up because I know that I have that reversal bar marker because I can't see it over here with the automated. So I have it over here so I can gauge the gap theory. Maybe. Right click and reinstall it, yeah. So I don't see it over here, but once the synthetics come in over here, dun, 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 you can have your large chart midband. On the chart here, you can, it's still calculating. Man, those videos were amazing, weren't they? So there it is right there. So let me show you what the settings look like to have that on there. I'm telling you guys, there's no secrets. We want you to see everything. But there's your settings. So on your 13.2, make sure that you have both of your reversal markers active, and that'll get it on there for you. And then, of course, if you need help, don't be afraid to reach out to Jason. The only things Jason can't fix are things that aren't broken. He is that good. So, guys, I'm going to take about 4 or 5 minutes. I'm going to go stretch my legs, talk to a man about a thing. When I come back, we're going to click on every picture that's been posted in this room. We're going to talk about the advantages on the chart. We'll identify whether you were trading in determination conditions without momentum. And remember, guys, the people that post the most get to where they want to be the fastest. So if you're brand new in my room, realize that you're probably not going to understand a lot of it. But what you will see is that there's a lot of Nexgen users using the exact same indicators from all over the world. And they're finding their success through their ability to read charts. So I'll be back in a few. Go stretch your legs. Sit tight. What you're seeing right now in crude oil is pretty normal on a Wednesday, guys, because on Wednesday, it's crude oil inventories, and that happens in about 15 minutes. And they're jockeying for position. So are they pushing to the right, Adam? Is that what it is? Yeah, there's a fix for that. I'm not sure what it is. Get with Jason and Tech. I know a couple people in the room have had it. Maybe someone can share the fix. I don't know what it is. I've never had that phenomenon. It has something to do with tick data, I think, or margins, and I don't recall what it is. Let me see real quick. Data series, instrument, lime green. Scale justification, price marker. I'm not sure. I'm sorry, Adam. There's a lot of things I can diagnose and help with, and there's some things I just got to defer to the experts on. So that's going to be one of those deferments. All right, guys, I'm going to scroll up to the top. And remember, I'm going to open every chart that's been posted, guys. I'm going to talk about momentum. We're going to talk about path. We're going to talk about entries. And I'm going to do it all from the point that there are high probability trend trades. That's what we're looking for, is the high probability trend trade. I feel like there were more than this. There were. Okay. I started halfway through. Andy head faked me because he put 2 in. I'm not going to play the trade police, guys. I'm not going to tell you, shame on you, you traded into a termination. I'm not going to wag a finger or give a disapproving look. What I'm going to do is I'm going to go back to the core concepts, because this is an educational room. And that's one of the reasons that it's so important that you guys mention what you see, because everybody's going to have their own plan. Everybody's going to have their own approach. Some people like chocolate cake. Some people like strawberry cake. I don't know. Some people don't even like cake. Who knows why? But when you go back to the core, when you go back to the root, the one thing that you're going to find is that most of the trades that you see will revolve around momentum and path. Momentum and path is the core. It's the foundation. It's what you all are going to grow from. And here we go. Andy, strong bottom. I disagree. So a strong bottom, guys, I'm going to give you the definition because it comes up in some of the trades that you take. And it really shows up in almost all the trades that you take. So we're going to define it real quick because you're going to see it on indicators. And guys, this is a Ninja Trader thing. A strong top or bottom means that price reached resistance or support, that absolutely none of the triggers broke through. And it's imperative that you recognize that none of the triggers break through. The moving averages couldn't push beyond. That termination, if it reverses the market, it's a strong top or bottom. And that's impactful because it means that not only did the buyers get to resistance, but at that moment in time, the sellers put such a whipping on them that they stopped them cold, the moving averages couldn't push, and the reversal happened. And guys, the best trend trades, the highest probability trend trades you ever take come from a strong top or bottom. And the highest chance of winning the potential to break comes from a strong top or bottom. And counter trend, the HVA trades come from a strong top or bottom. And momentum trades come from a strong top or bottom. It's not mandatory for a trend trade, but guys, it's going to work its way into everything else you do. And the way it works is this is a weak top. It doesn't come from a termination condition. When you have a weak top, the potential to break is less. And very often the market continues in the direction of the underlying trend. So being able to identify a strong top or bottom does in fact pay dividends as you grow. So Andy, you went long at all of the fibs. Take 2 off, take 2 off, stopped out of the third. It turns into a trend trade. Take 2 off, hit your target, No more longs, wrong side of the triggers. It's perfect. Andy, everything about it is perfect. And guys, what a wonderful challenge if the only thing that I could say is, well, it's not really a strong bottom. And guys, the only reason that I point that out is because that strong bottom becomes imperative. That strong top becomes imperative if you're taking that medium probability trade. See how it failed? 2 triggers through and it ends up going back up. That weak top lets you know that was likely to happen. Good stuff, Andy. Great looks. All right, trend trade. Let's see what it is. There's a question mark. That always makes me laugh. Triggers up, price on transition, clear skies. On the small chart, I don't know what I did here. It looks like I entered on a down bar on the right side of the triggers, which is not my rules. Needless to say, it failed for 400. So, never got your rules met. Didn't have room because you're right into the outer band. Entered on a down bar, violates the rules, absolutely no room, and it didn't work. That area that could stop the market did. Does that make sense, Victor? You say it failed for 400. Yeah, it's a mistake. So what's the lesson? The lesson is that the outer band is an area that's difficult to trade into. And when you're in transition, it's even more likely to stop you. And when you see strong triggers down in an HVA, it's even more likely to stop you. So the concept, and I said it earlier in the room, the number one killer of accounts among new users is trading directly into areas that could stop a market. And guys, I must have done it 1,000 times before I believed it. And we used this analogy the other day, and just a heads up, Novak men are horrible with analogies. But it's like knowing that if every time you eat chicken, 75% of the time, you're going to get food poisoning. Most of us would never eat chicken, ever. We wouldn't even risk it, right? Guys, when you trade directly into areas, you're eating that chicken, and you're hoping that you don't get sick that 25% of the time. Because when you see something, 1-to-1's right in the way, there's your entry, there's your bounce off of them, and another loser. 2 avoidable losers. And guys, I don't pick on you for taking losers. What I say is go back and annotate your chart. I traded into an area. I lost this trade. This is not my easiest path. This is not how I'm going to find my riches. Because when everything is up, this has to be Pete. And it's a strong trending market, which means that the momentum is understood. It means that the path is clear. Pete says, I'm going to jump the fudge in. Because when the market is railing, these guys know about Fibonacci, and I'll just jump the fudge in and see if they want to go to it. And if they lose momentum, I'll exit. And guys, this is one of those ways that momentum and path pays dividends. When you have momentum and path, you're going to find a way to be successful. Nice trade, Pete. All right, the talented Miss Jen. Upon entry, strong side. Here's your entry right here, but no room to the outer band. But here you take an entry right at the zone, 78. You are out at 81, so 3 ticks. It's interesting that you weren't interested in the 8 ticks to the outer band, but the 3 ticks into zones was very appealing. And then because it was the strong side, you know it has the potential to break, and you're out at the second zone. Nicely done, Miss Jen. Odds favorable momentum, clear path. Pull back to the area inside of triggers, and just profits, Andy. Great job, man. Great job. Does everybody see it? First it's momentum, then it's path. There's your pullback directly to a fib inside of triggers, and just rockets. Great job, Andy, man. Let's see what we have. Got one in the positive, right? The 15 minutes are down. It's on the strong side, not clear uh-oh, chose to take it anyway, traded directly into an outer band, but you had a little bit of room, and the triggers are in your direction, and you get paid quickly. $360 right at trouble. From 70 to 91 from the strong side of the triggers, trading back to trouble. Nicely done, Paul. Guys, just because it hit it, Paul, your entry was all the way at 08. And it was beautiful. You had so much room down. So much room down. And you had room to get to trouble here. Nicely done. 15-minute is up. It's on the transition. It's clear to the next zone. There is the entry. I like this. Chose not to take the first one. Paul, are you in here? But the triggers go up and you're not fighting them. And sure enough, just beautiful. You just get a better entry. Pete, it got scrambled a little bit. They're in there. I just made a mistake. Forgot to increase back to 2 contracts. 15-minute transition clear only to zone. 15-minute up, and you're going short, right? What's your no termination on the large chart? Trend is up, path is clear up, and you decide to go short, and it works. And you took the short to get to the long. You old dog, you, Paul. So this is pretty cool. I want to show something pretty awesome here. And Paul, please correct me if I make a mistake. Large chart says up, looking for long trades. Paul says, with this zone, with these one-to-ones, with those triggers rolling, with everything going down, that market is probably going to pull back to this zone to give me a trend trade. And Paul, you just rode the short to the long. Was that your thought process? Guys, this is how you grow with the software. And I want to show you something, what it stems from. When I teach the trend trade every day, I use the phrase, when the smalls turn against you, look lower. And Paul, that's all you did. You just looked lower and you said, well, that's where my trend trade comes from. Let's see if we can make a couple bucks to get there. I love it. That's a good chart read. That is taking core concepts and turning them into more money. And there it is again. Except this time we have a termination condition. It's up. It's the weak side. It's coming off of a termination. Small triggers are down. And you ride the momentum to where the trend trade would come from. Paul, 2 for 2. Back into your counter trend days. So guys, this is where I say, and Paul, please take this with the love intended, how has counter trend served you in the past? Don't answer in the room. But what's your record on counter trend trading? And guys, these are things that you have to think about. And Paul, I'm not saying that there's not a way, right? And both of those are perfect. But make sure that you stick to your recipe. Does that make sense? If you're going to go counter trend, those small triggers should be going counter trend with you. If you're going counter trend, you should be coming from an area. And Paul, you did it expertly twice in a row. So you have a recipe. So while you're describing a long trade here, change your language. Describe why you took the short trade. Because what you're doing is you're talking about reasons for long entries, but you're going short. And do you see how that's a little bit of a conflict? And guys, this is where annotation pays dividends because we want it to be repeatable. We want you to notice that the smalls are below the large. We want you to notice that it's coming from an area because, Paul, this is how you keep from thinking, oh, I'll go short right here. right? I'll go short right here with the triggers up and get the shit kicked out of me, pardon my French. But when those small triggers roll and the immediate momentum is down, it's almost effortless with that look. So guys, there is a recipe for the success on this trade. And Paul, you nailed it twice. Good job. This is one of my favorite Pete trades. Strong triggers, potential to break, and Pete will just jump in. With all that momentum and Rube to trouble, Pete will just jump in and hope that it goes. But Pete knows that with momentum and the potential to break, especially from a strong top, if this trade fails, it turns into a trend trade more often than not. If a momentum-based trade fails and the conditions are right, it just becomes a trend trade. So Pete says, I'm not going to panic. I'm going to add on. And I'm going to ride that trend trade down here. And I love this. This is a trade that I don't teach, but it's a chart read that I teach. And Pete did the work to know that if this fails, it turns into that. But Joy, please don't ever ask me if you should hit buy. Please don't ever ask me if you should enter a trade. I can't answer it. I can't. Are your rules met? Tell me what you see. Tell me why you think you should hit buy. Guys, remember, I'm not here to call trades. I'm here to look at your trades, to read your annotations, and to talk about your chart reads. So tell me, Bejoy, why on earth would you hit buy in this situation? Things that I want to see on your chart. I want you to define direction. I want you to define where the market is in relationship to those triggers that define direction. And I want you to tell me if you have rules met, perhaps for a momentum trade right here. I want you to tell me how you think it's heading up. It's definitely heading up. The triggers are up. But Bejoy, consistency isn't about hoping shit works out. Pardon my French, guys. I don't mean to swear, but sometimes it falls out of my head. It's patterns. It's patterns. So Bejoy, if the market is up, if you're on the strong side of the triggers, if the path is clear, if you have strong triggers, are you ready? Hold on. Let me find it. Let me find it, Bejoy. If you could describe it, guess what? That's a momentum trade. So you're not asking yourself, is it heading up? You're saying, do I have rules for a trade to go up with it? Does that make sense? Guys, if you constantly look for trades and you don't look for rules, you're going to wonder for the rest of your life if you should be in the market. But Bejoy, you can look at that and with absolutely no uncertainty, no question, no hesitation, no remorse if it doesn't work out, no terminations or zones reached on the large chart, yes. 15-minute on the strong side of the triggers, yes. Any pullback to an HVA with strong triggers, yes. My friend, you have the perfect momentum trade. Does that make sense? I actually woke up thinking about this morning. I love it, Bejoy. Good question. Because I really did. I woke up, I was with you. Isner was my nickname in high school. I wake up thinking about lessons, guys, and I do. I do this a lot. And one of the common questions in the room is, hey, Mark, is this a good trade? Hey, Mark, is this a long? Hey, Mark, is this a short? And I always answer, are your rules met? Right? What's a good trade? A good trade is a trade that presents an advantage or an edge that is repeatable, that is testable, that is verifiable, that you can say, when I have momentum path and entry, this is a trade that typically wins 70 to 80% of the time. That's a good trade. If I'm defining it, this is it. If I can do what Bejoy just did and describe the ideal pattern for the perfect momentum trade, that's a good trade. What's not a good trade? Not whether it wins or loses, but when I deviate from the plan that has proven success. All the momentum, potential to break. Pete tries to take a momentum trade without momentum. For the love of fuzzy, Pete, one day this is going to stick. That's Pete's thing. It's just comical at this point. But Pete knows when it fails, and it's more likely to, it turns into that trend trade with this look. And sure enough, it does, and down it goes. Now, one of the things that I want Pete to know, because I don't tell Pete how to trade. That's not my job. Pete doesn't want to hear that from me. Is I keep telling Pete, with this look, you're robbing yourself of that much money. Every time you take this trade without momentum, your stop belongs up here. You're increasing risk. Every time you take that trade without momentum, you're decreasing profit potential. So we just keep repeating it. Guys, I'm not worried about Pete. 3 trades this morning, 1 loser, 2 winners, up $1,000 by 6 a.m. I'm not worried about Pete. Pete has a plan. I just recognize one thing that may put him up to 13, 14, 1500 by 6 a.m. I hope you have a tea time, Pete. Nice job, dude. Great trading. And Paul said it in the room, and I'll echo it. Your understanding of expectations based on chart read has really, I've watched it grown exponentially over the years, and you do it really well. But guys, if you haven't put the time, the effort, the study, and the participation that Pete's put into his trading, it's going to be difficult for you to see what Pete sees. So everything that he does is rooted in momentum and path. That's the consistent. It's all rooted in momentum and path, and then he finds a way that suits his needs. All right, trend trade. Triggers are up. Price is on the strong side. Space to next trouble. Victor, you are like a broken record. Like a broken record. Here's my direction. Here's where I am in relationship to the triggers, and I have room to trouble. Pretty cool. Small chart. Price closes on the correct side of the triggers, and you can see that he waits for the close because his entry is on the next bar, and then he rides it right up to trouble. And you're out at 80.50, which means, Victor, oh, it didn't quite hit it, so it probably missed it, right? And you're like, well, I'm not going to lose. But you did, and that's okay. They missed you by a tick. Remember, these are zones. Great entry, make a little money, no reason to give it back. At that point, I love break-evens. When I hit an area, I love break-evens. Because the reality is, I get paid once, I lose nothing, I live to fight another day, and I wait for the next trade. And guys, the next trade's always coming. Pinched triggers, direction up, direction strong side, above 1-to-1s, room to the mid-band. You take the close above, and you get out at trouble, Miss Jen. And just a quick 120 shot. And the only challenge were those 1-to-1s, but you get in above them. Nicely done. You wait for price to get above trouble. You have room to the next trouble. You wait for the pullback. Guys, look at the patience on this. No, not yet. Don't do it. Isn't right. Can't take it. Don't believe in it. Not going to happen. Don't want it. Okay, let's go. Pretty cool, right? Knowing exactly where your trade comes from and having the patience to wait for it to get there. Jen, outstanding. And then it's up, and it's the strong side, and there's room, and there's the pullback, and there's the entry, and there's the profits, and there's the break even on the second. And Victor, you guys took the exact same trade. The exact same trade. 2 different people, 2 different genders, 2 different continents, 2 different backgrounds, taking the exact same trade. Why? Because it wins more than it loses, right, guys? It's a pattern. Pete, again, you're so boring, Pete. If my large chart has momentum and the potential to break, I'll jump the fudge in and ride the momentum down to trouble. Beautiful. Guys, do you see it? So if you're new with me, and guys, there's a lot of new names in here. Licanudo, it's great to see you still hanging out, right? I'd love to see some of your charts. Let me help. Pip Loki, want to see it. Alex, you're still hanging out. I want to see what you're doing. Guys, if you're new, post, talk about it. Look at this. My favorite large chart look. Strong top, termination that reverses the market. Triggers rolled, down, wide separation, odds favorable momentum, clear path. What's not to like? Holy smokes. He described like just the mecca of trading looks. Momentum entry. Half off at 10 because my job's to get paid, but with all that momentum, let's go to trouble. Pete, rock star status. 1775 at 7 a.m. $1,700. 7 a.m. And he knows exactly what he's doing. If he didn't, how on earth could he annotate his charts? It's up. Strong side. All closes above here are directly into a zone. Chose not to take it. Thank goodness, Jen. Can you imagine the heartache of it just rattling for 5 minutes? And Licanudo, if you need help with that, let me know. I'm always glad to help. Guys, the first 2 or 3, it's like jumping into a cold pool. There's a shock factor. You don't know what to expect. But once you get a couple pictures in the room, guys, Licanudo, you'll find that it is so easy and it's effortless. And I'm actually pretty friendly, except to Paul and maybe Ron and probably Victor, maybe Andy V. Okay, there's a lot of you that I'm mean to, but the new people, I'll be so nice. And Jen says, well, I finally got my entry, but there's nowhere to go. And sometimes it's just not your money. Guys, that's what mature traders say. That's what people that believe in their plan say. They say, you know what? It's not mine. And then if it runs, hell, I'll wait for the next one. Great job, Jen. Trend trade, triggers up, price on the strong side, space to the next trouble area. And then, Victor, you chose to take the shot from 75. Small triggers rolled, everything aimed up, and you decided to go. Guys, can you hear me okay? Give me a Y if you can hear me, please. Thanks, y'all. If you ever can't hear me, let me know. And I'll ask the classroom if they can hear me. And when everybody throws a Y in the room, you know that it's probably on your end and you may need to reboot. So, Victor, you entered right at the HVA area. So you knew that it was your trade. You knew that it was rules met. You knew that you had room. And instead of trading directly into the area, you let price start to break above. And notice that his large turned up, that his small turned up, and he had room to trouble. I like it. It's a great entry. Because if the triggers are up, you're not fighting them if you enter with them. Great patience, Victor. Nice long there. Trend trade up. 1-to-1s are your area. There's your close above. In at 09. And you only had 3 ticks to get there, right? And I'm glad you made money, but you only had 3 ticks to get there. It's a forced error. You must manage carefully. Close the trade as you should not have been in it. I like that. Here we go again. Trend, momentum, or jump the fudge in trade. Victor, it is a jump the fudge in trade. Why? Because you're up. Because I guess at the time of entry, you were transition. You had room to trouble. But here you had odds favorable momentum. You jump the fudge in. That's all it is. With every indicator on every chart going vertical, Victor says, man, what's the chances they don't make it to that zone? And he gets in and he gets out, and it's a quick trade. And it's just a momentum trade, guys, and it's really no different than what Pete does right here. He makes sure that he has momentum. He makes sure that his path is clear, and Victor says, you know what? There's got to be a way to make a couple bucks like that. Good job, Victor. Triggers up. Transition side, room to target, entry above trouble, out at the first sign of trouble, and because nothing really changes and it's odds favorable up, Jen holds it for the next area. Nicely done, Jen. Paul, people who have been abused by the coach are not are doing well, or in my case, doing better due to the fact that we post losers, winners, and losers are tough to post. Post them anyway. Amen. And I really do. I try to be pretty warm and fuzzy, guys. I really do try to not beat you up too much. I'll poke fun a little bit when I get comfortable with you, but if it ever gets out of hand, just let me know. All right, triggers up. Price on the strong side of the triggers. Nothing but clear sky as far as the eye can see. I love your descriptions sometimes, Victor. Small chart, missed the first bar where it closed on the right side of the triggers. Coffee run, got in on the second bar that cleared at 58, and I'm trying to see where we're at here. At 58, is that right? Were you in at 77 and stopped out at 68? This is your loser. Nope, you got 360. So you were in at 88. You couldn't have been in at 88. What is that? 68. You were in at 68. There it is. Right there with room to trouble. And you're out at 77.50. Let's get paid. And every indicator pointed up and nothing in the way. Awesome. Great job. All right. Did I get everybody's pictures? Pete, did I catch the ones that you thought I missed? I think I did. I accidentally started in the middle, and it messed me up a little bit. Cool. And that's all the pictures. Except, oh, no, it's not. Here we go. So Bajoy got his lesson, and I love that. That was such a good lesson. Guys, checklists are amazing. Trina, I owe you some, right? Did I miss them? I did. There they are. I got you, Trina. Don't let me get away with it if I miss a picture, guys. It's never intentional. It's never on purpose. If I miss a picture, it's because I'm a Yahoo and I'm human. So, all right, Miss Jen. Up upon entry, it was a strong side, room to the outer band, pulls back to the area. There's your close above. You get in just above trouble, out at 11, quick little pop. Not your usual trade, Jen. Not your usual trade. That's the man. I sure hope it doesn't go without me trade. I'm glad it worked. And I'm glad that you realize that may not be the best one. Let me get paid and get to break even quick. And sometimes, guys, you're going to take the wrong trades. Sometimes you're going to break a rule. Sometimes there's an emotional entry. Sometimes there's a fearful entry. And guys, if you find yourself in the wrong trade, it's okay to exit. I have lost more money taking the wrong trades, hoping that it works, than I have taking the right trades, hoping it doesn't fail. I don't know if that came out right. Weak bottom, 50-50-ish. Ish. Trina's adding some words to the vernacular. But because of the small chart read, and Trina, I want to talk about how great this is. A weak bottom is a challenge. 50-50, only 2 triggers through. Creates an issue or two, but look what Trina did, guys. Can I put you on a pedestal today, Miss Trina? Because I love the way you did this. I really do. And I want to show you guys how it all goes back to the core. I think, and it's just me, and I don't think often, but when I do, I think you guys should print this out, and I think you should lay it in front of you, and I think you should cut 3 pieces of paper large enough to cover these advantages. And I'm going to show you why. So if the perfect trade, if the advantages that I'm looking for to never hesitate are momentum, path, and entry. Trina says, because Trina's brilliant, I have momentum. There's a separation between the small and large. The colors match. The odds are favorable for the market to continue up. And before she ever looks for an entry, Trina knows that this is a market that's going to be hard to stop. And then Trina says, it's 50-50. Only 2 of my triggers have broken through. And Trina, is it safe to say that you said, hey, that's only potential? This is medium probability at best at this point. So her large chart read is I have all the momentum I could ever hope for, but that's only the potential to break. And I want you to see how Trina leans on her entry area. And she does a couple things. First, she demands an area inside of triggers. So now she's got 2/3 of her advantage. That's a good thing. But Trina doesn't leave it there. Trina says, you know what? It takes momentum to break areas. And I don't have any divergence. And I have strong triggers. So I'm not sacrificing any of my first advantage. My entry is clearly defined. The potential is there to break. But I know that it's only medium probability. So I get paid quickly on the first one. And I don't know what that is. And then Trina, that's a little bit of a scared second contract. I know that you're working on management. Why would you trail your stop so close? So this is one of the things that you're going to have to work out. I mean, that's tight, right? Would have been better to just take them both right there. You would have made more money. So guys, if you're going to trail, have a reason. So Trina, the perfect entry, right? I like the first contract. I can't tell how much it is. You're in at 51.5. The first one is off at 52.5. So you make your $100. Break even makes sense, doesn't it? Wouldn't it make more sense to say, you know what? Here's my expectation. I'll go break even, but let's give it a chance to marinate. And guys, I see people getting stopped out on these little fluctuations all the time. Now, if you want to chase the fluctuations, Trina, they tried and failed, I'll move my stop. They tried and failed, I'll move my stop. Then when you get divergence, now you have a reason to exit right there at 52.5, and that's $100 on the second contract. Having a reason. One of the things, it's like they know. It's like the people that control the market, they know where you guys that are scared or fearful, and I'm not saying that you are, Trina, they know you're chumming the water. Arbitrary stop placement gets hit more often than it doesn't. Such a beautiful entry. Such a great look. Great first targets. I'd rather just make 200 and come back and wait for the next one. Nicely done, Miss Trina. And it's all going to be management, right? You know how to enter a market. You know how to get advantages. And now we're going to work on management. Everything says up and the path is clear. Trina jumps in. Trina says, hey, it all says up. And Trina, that's a momentum trade. Stop makes sense. You get paid quickly, and then you exit with a loss of momentum. And this is perfect management. You gave the momentum trade a chance to run, but when it said, Trina, the momentum's gone, you didn't say, well, I sure hope it works. You said, I'm in a GTFO. I'll wait for the next trade. Really nicely done on that one. All right. Momentum down. No zones reached. Space to zone. I can't tell where you're getting in at 54. So you're below trouble with room to trouble. Strong triggers, space between the smalls. There's your break. There's your snapback. There's your continuation. Perfect momentum trade, Trina. Down, strong, space, and you did everything. Zone breaks, there's your pullback to enter, that's your momentum trade, and down it goes. Expert. Absolutely beautiful, Trina. Good chart read. Triggers flat, wait. I love it. Triggers flat, nowhere to go, so many reasons to not look for an entry, and Trina said, I'm just not going to look for an entry. Exercising your right. All right, you entered here, 20 ticks to the divergence line. Smalls are up. Where you entered, it looks like they were already on their way back down. So focused on making a trade happen and pull back that I did not see a huge brick wall you were trading into. That's your close on the correct side of the triggers, Trina. That is you smashing into a wall. And that is that wall holding and pushing down, right? Room to trouble. That's all it was. And then once again, guys, I want to say she didn't just take the loss and say, dang it. Dang it, this stinks. Dang it, they took my money. Dang it, I hate Mark because Mark probably made me do that. She said, whoa, I traded into trouble. And Trina is probably going to be focused on trouble. Next time she goes to take this trade, she's going to say, wait a minute, is my 1 minute clear? Let me make sure there's not something in the way. And Trina, I love these trades. As you begin to work on a methodology, as you begin to work through the looks, the patterns, making mistakes like this keep you focused on not making them later down the line. All right, quick trend trade, quick profit, smalls are down, strong side of the smalls, room to the mid band. Couldn't get in here because of the zone, so you get in below the zone. In at 80, it hits trouble, and you do manage to get out break even. And Trina, not a lot of room. You say you were out before the zones. Where was your entry? Couldn't get in here because of the zone. You entered after the close here at 80.3, which is right here. At 79.3, that's $100. Oh, there's one of them. Is that two trades, Trina? So quick one for 100, in and out. Another quick one for 100, in and out. Nice job. It's tight and you don't hope, you just get paid. It's fun when you just get paid, isn't it? It's so much easier to get paid and wait for the next one. Show of hands, who in the room has ever exited a trade and thought, man, that was probably it. The market's never going to trade again. I can't believe this is it. No more. There'll never be another trade. I've done it. Who's waited for a trade and thought, oh, this is my only chance. I better break a rule because if I don't, the market that trades $269 billion daily is probably going to flatline. It just doesn't happen, guys. So great job. Willingness to get paid is such an important skill. Such an important skill. All right, Boaz, let's see what you did. Odds favorable momentum. Absolutely nothing in the way. Areas inside of triggers didn't work. And there's no divergence from the one-to-one. Boaz, it's a great looking trade, man. It's a great looking trade that didn't work. It's a pattern that typically wins 70 to 80% of the time. It didn't work this time. It just didn't. Had everything you look for. And the only thing, guys, the only thing that I can say, Boaz, and it's hard to tell after the fact. If the small triggers on my small chart, are less than a full bar away when I get to my areas, I'll wait for a close on the correct side of the small triggers, Boaz. And this is a pattern that I recognized through an enormous amount of butt kickings trading the NASDAQ. When these small triggers are less than a full bar away, they can behave as resistance because it's a 13-2. And I will literally just wait for the close on the correct side. And if I don't get it, I just don't enter. Because it has to go up, right? If it's going to win, it has to go up. That saved me, and it saves me so often. And Boaz, it saved me this morning. I was waiting for a trade, and the small triggers were too soon, and I was like, man, I'm going to wait for it to get to the right side. And it never did, and I never had to take that loser. So just a little something. Doesn't trading activity vary during different times of the day and night? It can, Bejoy. And when you say trading activity, I'm going to change that to volume. So the volume may change depending on the time of the day. Crude oil has its best volume, its heaviest volume, earlier in the day. And what you'll find is after about 11 a.m. Eastern, So right about here, this was the next 6 hours, Bejoy. That was the next 6 hours in crude oil. And that little box right here. Now I'm going to do something. I'm going to take that picture of what happened in 6 hours, and I'm going to go bum, 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 bum. Just for grins, let's do the NASDAQ. Its last 6 hours. I can't even scroll back. Here we go. That's about it right there. So that's the last 6 hours of the NASDAQ. That's the last 6 hours of crude oil. Pretty big difference, right? So depending on the time of the day, depending on the market, you may have almost no volume, or that market may still be going gangbusters for you. So you guys that are like, I'm only a crude oil trader, your day's done at 11 a.m. Central or 11 a.m. Eastern, guys. That's when the volume dissipates. That's where there isn't the advantages. All right, strong triggers, clear path. This is the NASDAQ. There's my areas inside of triggers. We'll see what happens. For crude oil, it's about 2 a.m. Eastern. Boaz, do you see how the trigger lines are right up on it? This is where I would say to take this trade, they're going to have to give me a close on the correct side of the triggers. And if they do, my risk is established. I'm no longer fighting the triggers. I'm trading with momentum. My path is clear. And it doesn't guarantee a winner, but it gives me a fighting chance. It keeps me from getting run over right here. And of course, that one ultimately fails with the lower divergence. But that little bit of patience very often helps out a lot. It's about 2 a.m. Eastern, Bejoy, until it's about 2 a.m. Eastern until about noon Eastern, 11 a.m. Eastern, is because the European market opens up at 2 a.m. Eastern, and crude starts to move, and you'll see on Pete's charts, he's in the market. He's up, I think he's Eastern time frame, hanging out in Florida. And he gets a lot of movement before this room ever starts. All right, Trina. These 1-to-1s are gone. Smalls are up. Strong side. Wait for the pullback. In after the close. Getting paid. Trina, have you found that TradingView is pretty easy if you're just patient? But the 1-to-1s are not gone. They're still there. So you may want to change the opacity a little bit on your charts, but you're in at 91. You had $160 per contract to get back to trouble. And you can adjust that, Trina. If you go to, just like double click on the bars and right body borders wick, selection, hold on. Status lines, scales and lines. I'm trying to figure out which one it is. There's a way to, there we go. If you click on the body, you can drop the opacity so that you can see through them. I knew it was in there somewhere. Let me give you the picture. And that way, if it's right at one of those areas, you can see it. One of the other things I do, Trina, and not that you have to do what I do, if I have an area on my large chart, I'll take this trend line and I'll do this. And I'll just put a line right there. So on my small chart, I can see exactly where that line was. And if I'm trading, I'll say I either have to trade to it or trade beyond it. And that's one of the little tricks that's helped me out a lot. And that's good for like 1-to-1s, for outer bands, stuff like that. And it just gives you a visual on the other chart. And then Pete, everything says up. The momentum is strong. You can't see it, but it was a strong bottom. Triggers rolled up, all the momentum. Jump in and go. And that was beautiful right here. And you just caught the second half of it. Quick 400. 10 ticks, 4 contracts, $400, six-figure income. Congratulations, Pete. What a beautiful trade. All right, guys, we made it through all of the pictures. When the markets are open, Bajoy, I think NASDAQ is damn near untradeable right off the open. I think NASDAQ is its smoothest. And what platform are you using? Are you using NinjaTrader or are you on TradingView? TradingView? Cool. Well, minute bars are always minute bars, which makes it nice. I wake up at 4 a.m. Pacific, which is about 7 a.m. Eastern, and the NASDAQ is already knee-deep in the good stuff. Pre-market is outstanding. During the market is outstanding. All the way up to 5 p.m. Eastern is pretty outstanding. There's tons of movement in both the NASDAQ and the S&P. And then they slow down after 5 p.m. Eastern. One of the things you guys can do too is you can just go back and do like replay and watch how the market moves and look how it shakes out for you and see if it goes with what you want. Right to a divergence high, and that's exactly where the market reversed. And then check this out, guys. Just for poops and giggles, momentum and path, right back to an area inside of triggers. And then Boaz, if you took the close on the correct side of the triggers, it goes. And if you missed it, it pulls right back to the area inside of triggers to finish the move up to treble. And guys, that is 2 perfect trend trades, and that's a day's worth of profits in 18 seconds. That's what we're looking for, the best of the best. So here's what's going to happen. I'm going to walk away for a minute, and when I come back, we're going to talk about what we see in the live charts. We're going to talk about momentum. We're going to talk about path. We're going to talk about pullbacks to areas inside of triggers. If the rules are met, gosh, that was pretty. If the rules are met on the chart that we're looking at, and when I say if the rules are met, if the KISS plan rules are met, if the highest probability, if the best of the best rules are met, we'll enter, we'll manage, we'll have some fun, we'll talk about the live reads. If you have questions, post them. If you have pictures, post them. But I'm going to take 2 or 3 minutes, and then when I come back, we're going to say clever things like my smalls are inside of the triggers. I don't have momentum. All of my triggers are above fibs. I do have a clear path. I don't have any areas inside of triggers. I can't define my entry. Therefore, 2 out of 3 gone is low probability. I am obligated to not take that trade in front of you guys. Aaron, we'll start with you when I get back. About 3 or 4 minutes, guys. Here we go, home stretch. Bum, bum, bum. Nothing's changed. I still don't have the advantage of momentum, but I do have a clear path. I don't have an area inside of triggers. And guys, my plan says I'm sitting on the sidelines because I'm Mark. I'm a brand new user. I don't have any experience. I can't read my indicators fast enough, so I'm sticking to a checklist. That one says I don't have a trade. I have momentum. I don't have a clear path. Does everybody see it? And I want to do this real quick. So watch this. Rule number 2. Guys, I want you to see it. Here, price reached a divergence line. The triggers didn't break, and it reversed the market. Here, price reached Fibonacci support, and the triggers didn't break, and the market bounced. Here, only 2 triggers made it through divergence low. The market went up, straight to Fibonacci resistance. None of the triggers broke. The market comes down, right to a divergence low. None of the triggers break. The market goes up, right to a divergence high and a fib. None of the triggers break. And the market goes down. Does everybody see that? Give me a Y if you see what I just described. Termination, termination. Potential didn't work. Termination, termination, termination. You guys see it, right? Now, let me give you a little insight to your brain. Your brain is going to tell you, and it will too. Your brain is going to tell you, you should take this trade. Because what if it breaks? Is anyone feeling that right now? You should take this trade. Because what if it breaks? Imagine how rich you'll be. Imagine the glory. The heavens open up and children sing songs about you because you took a short trade and it breaks. What do you mean, what if it's not a strategy? What if your plan says trade into it? What? Oh, I got you. What if is not a strategy. Thanks, Belt. You're absolutely right. What if is not a strategy. I thought that was an incomplete. Yeah, it does. Yeah, it does. But guys, this is what happens, especially to new traders, is they say, I didn't make money, and I didn't make money, and I haven't gotten paid, and I'm not in the market, and the market's moving, and I'm not making it. You know what? I'll break my rules. And our ego and our pride says, it'll break this time for us, even though it didn't do it the 10 times before. And guys, I don't know what's going to happen, but I do know that I have a lower chance of winning if I take that trade. And that is day trading. Oh, Sergio, we all are. I am chucking stones from the glass house. But guys, this is the thing. And then when it goes down, right, when you do get the pullback and it starts to go down, you start saying, I knew it was going to do that. Guys, you didn't. You'll never know what the market's going to do. That's where probabilities comes in. That's where consistency comes in. That's where having a plan comes in. And then Aaron, strong, large, sharp momentum, clear path, waited for the pullback inside of the triggers, but hesitated, got in on the way up, got out at trouble. Aaron, hesitated because you're not sure yet, right? But you're working on it. And guys, this is how trading happens. And it's hilarious how it happens because all of us do it. Not all of us admit it. It sounds like high school, right? All of us do it. Not all of us admit it. And let me show you. So much so that I made this picture. And we all laugh because we've all done it. Aaron, you're about to go, oh my gosh, this is my story. It's mine too. So first, we jump in, fearful that the market goes without us. And then it almost always gives that darn pullback. And we get stopped out and we're upset. And then we think it's going without us and we jump in at the high tick of a bar that doesn't actually go. And then it comes right back down and we get stopped out because we don't want to put that much risk on it. And then where we should be waiting for this one, Aaron, It is that one. Because now we're like, I think that's it. That might be it. Could that be it? Oh shit, that was it. Right? But Aaron, what you did here is you waited for the pullback. You waited for the bounce. And now your trend trade expectation is that fib. And all you did was catch it halfway through. The exact same way Pete caught it halfway through. And all you're doing with that trade that you took is you are leaning on momentum and path. You are leaning on the idea that it's more likely to hit that fib, and you just found a way to do it in the middle. And I really like it, Aaron. And instead of jumping in before the pullback, getting in after. Because what is the pullback? Hold on, let's go to it again. I put little stories to what the market's doing, and I give them personalities. Whoops, I didn't take a picture of it. So Aaron, your pullback, when everything says up and the buyers are in control and they are rocking it like a hurricane, that pullback is the sellers saying, oh, we want it to go down, and then boom, failure. So you getting in right here, you let the sellers try. You watch the sellers fail. You watch the buyers take back over, and you said, I want to do what the big chart buyers are doing. And it's a almost effortless trade. Virtual high five, Aaron. I love seeing you get in on this side of it instead of this side. You are on your way, my friend. Miss Jen. Odds favorable, clear path, strong bottom, perfect entry, let's make money. Jen, killing it on 2 separate platforms. Nicely done. That is textbook trend trade, my friends. Textbook trend trade. And you were out. 32.50 was the high. Oh, that actually pulled back and gave another one. Jen, nice job. Does everybody see it? Momentum and path. Pull back to the area inside of triggers. And it just keeps going. Love it. All right, belt. The fib is missing. What is the rationale? Great question. So, and the fib is there on your other workspace. So your automated system, belt, you got your ears on for me? I saw it. Doesn't use synthetics. The chart with the system on it doesn't use synthetics. It is based off of 34.5 areas, triggers, 1-to-1s, midband. This is why John Novak has been saying from day one, it's not a set it and forget it. It's not a just let it do its business and hope you become a millionaire system. Small chart management comes into play. So you don't see the fib here, right, Belt? But you see it perfect right here. And you see divergence from it, perfect right here. And you see an even lower divergence, perfect from right there. So while your system is saying, hey, I see 3 triggers through, odds favorable, momentum, and nothing in the way, that small chart comes in and says, all right, Belt, that's probably not your trade, brother. That's probably not the one you want to take. And that's the small chart management that John Novak talked about. Being able to recognize on the small chart when you might need to pump the brakes, because the large chart is perfect. I would take that large chart look all day long, but your small chart keeps you out of that trade. And let me find it for you real quick. It's a great question, but it just doesn't use the synthetics. Let me go to videos, and I do believe this one is freaking amazing. And this is John Novak. He took the classroom, maybe it was last week, and he talks a lot about those small chart reasons, not to take the large short trades. So Belt, I would encourage you to take a look at that. And then I believe that's probably the most complete version, but there is one somewhere else. Those are all the live dailies. And I'm not sure where he did it. There we go. Trade management for full automated system. So there's a couple resources for you, Belt. And then guys, I've told it to everybody, if you're using that automated system, if you're letting it do the heavy lifting for your entries, come talk to me on the small chart, because there's some very definitive looks that'll have you managing a little more assertively, and there's some very definitive, easy to describe looks that'll keep you from taking that next trade or Belt from disabling. So what I'll do is when I have my strategy on, and let me turn it on real quick. I don't typically leave it on in class because when I hear an order fill, it freaks me out. But when my large chart says giddy up and the rules are met, I'll come over to my small chart and take a look and make sure that there's not something happening that would make me not want to take that entry. And guys, that's the perfect trend trade right there. But mine didn't take it because there wasn't divergence from the low. Does that make sense, Belt? And there it is again. There's a large time frame fib that you don't see on the chart over here. So if you tighten it up, you can still know exactly where those areas are. Everything says up. Nothing in the way. You get in on the way up. You can see the fib, right? You can see all the trouble. So this is where Belt, you might say, holy shit, there's a lot going on right there. I don't want to give that much back. Or maybe I'll take profits right here. And that's totally up to you. That's a pretty good, at least manage, right? When I get there, I'm not going to lose. Not into all that, and it's going, which is nice, right? And that happens sometimes. But you know where the trouble is, and that's where the management comes in. And that's just a momentum trade. And it's just, and they're running. They are running like Forrest Gump. NASDAQ is fast. NASDAQ is fun. I enjoy NASDAQ. But if you look at a system that is rooted in the best of the best, guys, and I tighten this up. Momentum and path, there's a short. Momentum and path, there's a short, right to trouble. Momentum and path, there's a long that didn't work. Momentum and path, easy win. Momentum and path, easy win. Momentum and path, they bounced, went down. Guys, there's not a million trades. There's not a million arrows here because it's rooted in the best of the best. And then you've got some small chart opportunity to manage it a little more assertively. Boaz got it too. I love it. All the momentum, all the path. There's your pullback just above the mid band. Didn't quite get there, and then they came for you, Boaz, just in case you didn't get it. And you're in all the way up top. You're in at the, oh no, they're going without me. And they head faked you, right? And they didn't go without you. They came back for you. And there's a good lesson there. There's a really good lesson there. And then there it is. And off it goes. But Boaz, you don't panic. You're like, no, this is perfect. I know where the best entry is. I'm not going to worry about it. They're probably going to bounce. They do more often than they don't. And I know exactly where they're going. Love it. Great trade, Boaz. No divergence. It doesn't matter, does it? It's odds favorable momentum. It's clear path. It's clearly defined areas inside of triggers. That is the holy grail. That is the mother lode. That is the best look you could ever hope for in a trade. And it did everything that pattern suggested that it would. Everything. including finishing up to the large short trouble. And it's a difference of about $120 per contract, which means you have an extra $240 of risk, and it's $240 less profit. Doesn't matter, though, because when it's this pretty, what a great trade. What a great trade. You're welcome. Thank you. Look at that, guys. Oh, my gosh. Does anyone remember? Sorry, Pete. You don't have to yell at me. Where did I miss it, Pete? Was I on break? Was it this one? I know, I'm just messing with you. Pete, you can do no wrong. Strong top, triggers roll. You decide to take the shot into 20. You say, you know what? I'm willing to take the shot. Guys, remember when I told you that all you prideful people are going to say, this will be the time it breaks. I know that it hasn't broken in the last 28 times, but this will be the one. So I'm going to trade directly into a pivot stop out at a 1-to-1 with divergence. And it works out for you, Pete. And guys, I'm not afraid to tell you when you get lucky. And Pete, I think you got lucky. And that's the thing, guys. Bad trades, and I'm not going to call it a bad trade. And Pete identified it, not a great entry, right into the 1-to-1s. Divergence from 1-to-1s. Guys, there is so much wrong with this trade from an advantage standpoint. There really is. And you know what's awesome? You want to know what's amazing? Is that every now and then, your train wreck of a trade is going to win, and it's going to put money in your pocket. But what you have to do is you have to believe that this is a low probability scenario. Would you agree, Pete? And you know exactly what you're up. Momentum turning into trend trade is your ace in the hole. I agree, 100%. So many red flags, and it works out. But guys, you're going to make the decisions. You're going to be like, hey, this is what I see. This is what's good. This is what's bad. I choose to accept this risk. And Pete, you do it really well. You couldn't pay me to take that entry, but I'm not Pete, right? Pete probably doesn't want to get tattooed like I do. He's not me. It's okay. Find your groove. And your groove works. Nicely done. Lucky for me. All right, Aaron, you were about to ask on that crude oil chart if that pullback was a good area to enter or not. Thank you for doing that. Chart had strong momentum. No, it didn't. Had a clear path, yes, but there wasn't an entry area. Blew straight through it. So, Aaron, thank you for saying that. And I was about to go through it. Are you ready? I took the picture for a reason. If a trade is first momentum, Aaron, smalls inside of the large. Do you see it? Does everybody see that that is not strong triggers? That is not the advantage of momentum. It looks like this. It can only look like this. It can never look like this. So Aaron, when I have this look, anything can happen up or down. There's no momentum pushing that market the way I wish it would. Does that make sense? We're going to go through this piece by piece, guys. Pretend like you want to become a better trader and play along. He said in a snarky voice. Okay. So let's go the other way. There's momentum. It's not a clear path because the large triggers are above the reversal bar marker. That's the gap theory. The midband is behaving as a termination condition. There's no areas inside of triggers. It all goes back to those very core things. And the challenge is it a trade? Is it a trade because it went down? Is it a move that I'm supposed to be in because it went down? And guys, what I want you to hesitate on doing is saying, look what it did, I should have gone short. Instead, Instead, say my rules weren't met, it's not my money. That would be a momentum style trade, maybe an HVA if the market flow said yes. No, because an HVA trade, Cam, starts with a termination condition on the large chart. And from a weak top, the mid-band's more likely to hold. And when the mid-band gets hit and the large triggers are a full bar away, it's more likely to close that gap to the large triggers. And the fact that it went down is because somebody with a metric ton of money pushed it down. But there's no rules met. There's no rules met. I don't have any rules in the literature that Nexgen has been teaching for 30 years that says that's your trade. Because it doesn't come from a termination condition. Does that make sense, everybody? And what sucks, Aaron, is you're like, man, it went down anyway. Exactly, Cam, perfect. So because this is a weak top, my eyes are on the mid-band to create a bounce. Because the large triggers were all the way up here, the gap theory says a pattern is that very often from the market comes up and closes that gap to the triggers, right? So that's like 2 strikes against it already. And then I also have no areas inside of triggers. I can't really define an entry. Where does my stop go if I get in? Above the triggers where the market shouldn't. That's huge, huge risk trading into a termination condition with the gap theory in play. Now, Aaron, can we take it a step further? Because guys, I'm not telling you don't trade. What I'm telling you is gauge your advantages and you make the decision. Now with this level of strength, without a lot of reaction and all that momentum, guys, Pete has made a career putting stop signals where they don't belong. Pete's made a career trading that little snippet of momentum after it gets below trouble with the large sharp momentum. Do you guys see it? So is it a rules-based trade? I don't have any rules. Is there opportunity? Of course there is. There's truckloads of opportunity. But until you get in sync with the market, until you start speaking in terms of advantages, it's really hard to do it. And that's essentially what it is, Cam. It's a chili dog. All the momentum. By the time you take the entry, the mid-band's no longer behaving as a termination condition. You let price get below the thing that could create a bounce. But Mark, it didn't. It did right there. That's why you let it get below the thing that could create a bounce. And then, Cam, you have to ask yourself, with this level of momentum, with absolutely nothing in the way, with strong triggers on 2 charts, and everything screaming south, what's the likelihood you can't make $100 in there per contract? Does that make sense, everybody? That's kind of the evolution. The idea isn't that you stay chained to that one trade, that you stay latched to that one set of rules, that one ideology, that methodology. Every time I post this in the room, guys, this plan is a stepping stone in your learning journey. It's the beginning. This is day 1. This is kindergarten. Did you know that every brain surgeon out there probably started at kindergarten and worked their way to that mastery, guys? This is designed to optimize your chances of success, to help you feel the success, the confidence that comes from it. Through study, simulation, class feedback, and practice, my friends, you will write a plan that suits your needs. You will write a plan that makes sense to you. You will write a plan that speaks to you every time you look at the chart. And I would wager to say, because I'm a betting fool, I would wager to say that the most successful plans presented in this room revolve around momentum and path. You want to do these other trades, but you keep reminding yourself that until your plan is in place and your system is solid, then I will explain from trend trades. You know, John Novak has been saying it for 30 years, Cam. Get good at one trade. Get good at a high probability trade. Get good at a trade that wins more than it loses. And from the time you spend in that one trade that wins more than it loses, you'll see the rest of the trades. It's a natural progression. It really is. It is a natural progression. All right, strong bottom, odds favorable, potential to break, pulls back to the area, second lower divergence, and then absolutely, if you exit with the second lower divergence, there's your confirmation, and off it goes, Boaz. Does that make sense? You were out before because they got you below. Yeah, replay it, Cam. Replay it. So Boaz, remember when I talk about the relationship of price to those small triggers? How if they're a full bar away, use the area. Because you literally have 24, 25 ticks to get there. It's a $100 trade to get to those triggers. But if it hits it and they come back down, that's where waiting for the close on the correct side works. And this one didn't give you any time. You're in, second lower divergence, you probably exit, give up a few ticks, and then that is it. That is your confirmation bar. Because the large chart says up, that's where it would come from. But Boaz, you also have to ask yourself, with two divergences, divergence from a 1-to-1, a second lower divergence, only the potential to break and flat large triggers, is that your best chance of success? There's a lot going against that trade, right? You took a great first shot at it. It just didn't pan out. But it's not the best look, because that really is a weak bottom, because the small triggers got through. And it retested, which helps. And we'll see what happens from it. What did it do from there? I think that was it right there. First one, second one, and then it did head up. But then Boaz, it gives the perfect trade right there. And there's the same phenomenon. And I know that you took this one, right? Small triggers are a full bar away. And it hits them, and then it behaves as resistance and pushes down. I love this pattern, Boaz, and when you start getting in tune with it, it's crazy. It's crazy how often you see it and how patient you become, because when this is screaming up, that's your only obstacle between you and profits, and you did it perfect last time. Nicely done. 15-minute up. Rolling short, weak side, entered directly into yellow 1-to-1s. Did not have them marked on the 1 minute. Not a reversal, short of trend. Once I saw my mistake, realizing it was a pullback to the area for the long, I exited minus 90. I was fixated on all those arrows saying price was getting blocked. My brain was set for the appearance of the white paint bar short. Awesome, Boaz. So, Paul, you've changed your dynamic. You've stopped looking for the easy trades, and you've started looking for the counter trend trades. Have you noticed that? Okay. I'm not going to tell you whether it's right or wrong. You also traded directly into trouble. And you also traded directly into trouble with up triggers. So I get it. Great save. To only lose 90, great awareness and understanding. But there's this weird thing that happens. And Paul, I'm not using you as an example, but I'm going to have the conversation because you're here right now and because everybody's here right now. And I want to show you guys this progression. And it goes back to Cam, what you were talking about. And then Cam, I'll answer your question about those tops and bottoms. So first, we keep it easy and we find success, right? And what is that? That's the KISS plan. And then we learn to read our indicators, and we see more opportunity. So far, am I describing anyone's journey other than my own? Probably everybody's. Then we abandon our rules that brought us success, and we trade what we see and think rather than what our indicators say. And cough, cough me. Yeah. So guys, this is a very normal transition for everybody. You start basic and you find success because simplicity, guys, easy rules, go with the trend, don't fight momentum, all those things that create this amazing foundation. But as you get better, you start to see more. And you do, and we all do. And this is where most traders take a step back, because now we start using words like it will, it should, I think. And when I was in the corporate world, my job was to train new managers. My job was systems and routines, if you can believe that. And everybody got a checklist when they came to work for me. Everybody got a checklist. And the checklist brought them success. And it was a phenomenon. And forgive me if this hurts anybody's delicate sensitivities. I called it the 30-day stupid. Because right around 30 days of success, we begin believing we can do it better than the checklist that brought us success. Right around 30 days, we abandon the idea that we shouldn't trade in determination conditions, because now we know that the market's going to go. And we start going counter trend, even though we lost it 1,000 times before. Because I'm winning at one thing, I believe I can win at everything, guys. And this is normal. But this is where you got to reel yourself back in. This is where you have to check yourself and say, wait a minute, I was kicking ass and taking names last week. What am I doing different? Oh, now I'm trading in determination conditions. Oh, now I'm fighting trends. And it doesn't serve us. So, Paul, you're in a good spot. You're in a good spot because you did. You were hyper-focused for 30 days, and that success creates a little bit of arrogance in all of us alphas. And now, today was your kick in the clackers. Today was your, okay, now I'm starting to trade my reads, not my rules. And this is where you have the opportunity to reel it right back in. Right back in. We all have arrogance, Paul. No matter how much you believe you don't. It's human nature to be confident and maybe even overconfident in our abilities. It's what makes us the apex predator. I firmly believe that. I'm as compassionate as they come, but I do have a level of arrogance. There's no doubt in my mind. It's human nature. Some might even say God-gifted. There you go. So, Cam, let's go to tops or bottoms. Let's go to tops or bottoms. I said that one was a weak bottom because the small triggers broke through. Guys, when you are defining strong tops and bottoms, let it be a termination condition. So in order to identify a strong top or bottom, it's imperative that you understand the language that creates a termination condition. Price reaches the area, no triggers break. And when that reverses the market, that's your strong top or bottom. So Cam, what we were looking at, whose chart was it? This was a good example. Not a termination that reverses the market, so it's more likely to create a bounce here. And where was the other one? Was it Boaz's? There we go. And just using language, right? Because the small triggers broke through the bottom, we can't call it a strong bottom there. But when it came back and retested it and all the triggers were above, that's when it becomes a strong bottom. It's okay. Paul, I've made every mistake you guys will ever make. I have gone full circle 1,000 times. And truth be told, I don't know if any of you guys ever have kids. Most of us do. The kid that you bump heads with the most is the one that's most like you. because you see yourself in them and you don't want them to make the mistakes that you made. And I feel that way in this room sometime. When you guys do things that you're like, oh, I can't believe I did that. All I see is me making the same mistake, 2 or 3 years ago. And I'm like, oh, I don't want these guys to make the mistakes I made. I don't want you going to jail. I don't want you, doing whatever I did wrong. And the reality is that you've got to make the mistakes, that you've got to go through it. And that's where I come through and I play that role where, hey, you're not a bad person for going counter trend. This is part of it, but let's get back to what's bringing you success. You're not a bad person for trading in determination conditions, but you lose those more than you win. Let me help point that out. Let's get you back focused on success. I think that's one of the reasons that this classroom is so effective. And Trina, I don't know if you have kids. I've got two boys. My oldest is my wife's personality 100%. He lights up a room when he walks into it. My youngest is me. I had to separate my wife and my oldest from each other during puberty years, and my wife had to separate me from my youngest during puberty years because it was like one of those beta fish fighting itself in a mirror. Two girls and your youngest is mini me? Yeah, same. My oldest looks like me. My youngest he opens his mouth and I fall out. It's kind of funny. Pete, all the momentum, potential to break, get in below trouble, make money. Come on. That's a pretty good recipe, isn't it? All right. So there's a story that I'm going to